the Omicron variant and the latest wave have an impact on not only consumer trends, but your business? And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Start of the year with 2 months of losses in the equity market on the S&P. We add to those losses as we kick off the month of March. We're negative 0.6% on the S&P, on the Nasdaq, down by about the same amount on the Russell, off by 0.5%. The price action is in the bond market today, the United States and in Europe, in Germany specifically. Let's take a look at the front end and the back end, 2s and 10s in the US, 2s and 10s in Germany. We look like this, down 13 basis points on a 2-year in America, down 12 basis points on a 2-year in Germany. We've taken out the bet, the chance for a 50 basis point hike this month of the Fed, and we've pushed out the chance of a rate hike, Lisa, this year for the ECB. Are we acting a little bit too fast, too soon on what these central banks might do, considering where this inflation data is set to print this month, the month after that, and the month after that?
Are we responding to the last crisis and the central bank policy book for that crisis, and not this one, which has a very different profile?
Conditioned by this idea, Tom, that this market is supported by a central bank that can step back easily. Things will be okay. A lot of people have said, TK, it's different this time. The durability of that Fed put, we've got to question it. We've certainly got to question it in the coming weeks and months.
And the complexity will be wrapped around the data. Yes, that's true. But, John, I'm going to really emphasize it's wrapped around the politics. There is a history of the American central bank in times of war. Now, the war may be over there this time around, but nevertheless, Mr. Powell will face unique pressures from Mr. Biden and, frankly, from others within Washington that may amend what the markets are saying.
And the risk here is a second energy shock. If you switch on the board and just finish on crude and look at WTI and Brent up by another 4%, 101.87, call it 85. What we're all interested in here, Tom, is yes, they are, in theory, presenting us with an energy carve-out. What we're seeing in practice is something very, very different. And how the flows of capital get wrapped up in the flows of commodities in the coming weeks, Tom, that's what we're all laser focused on.
John, we haven't talked about it much because we're really focused on the markets in Europe, but live tonight will be Mr. Biden in the State of the Union, Joe Matthew covering that for us. And I went back and looked, John, at that AAA unleaded gallon of gas, which would overwhelm this State of the Union except for what's going on in Europe. John, up 70% since November 3rd, 2020.
And when we get that address, Tom, and you get the PDF, you do the control find, inflation. How many times do you think the President of the United States has to mention that word?
Let's bring these two stories together. We can do that with Libby Cantrell, public policy head at PIMCO. Libby, I must speak of Europe. PIMCO, long ago and far away, made a major commitment to Germany and to continental Europe investment as well. Obviously, your relationship with Allianz in Munich, etc. What have you learned of Europe through the PIMCO channels?
Yeah, well, I mean, look, I think that this is an incredibly dynamic situation. I think, as of last week, what has happened over the last few days, just in terms of the solidarity between Europe and the United States, has really been extraordinary. But as investors, as fiduciaries for our clients' money, I mean, this is yet adds just yet another level of uncertainty, as you guys have been talking about. This could just exacerbate inflation, exacerbate supply chain woes, could dampen growth, particularly in Europe. So clearly an uncertain environment. But I think everyone should feel good about the fact that there has been just this incredible coordination between countries in the West, really since we haven't seen since September 11th.
Your purview is public policy, and that, of course, goes to the State of the Union. Greg Valliere today with a shocking sentence where he says, look, Joe Biden is a wartime president. What do you expect to hear tonight from the wartime president?
I think the president's going to have to really thread the needle on tonight's address. There are things that he is going to want to sort of brag about, the bipartisan infrastructure framework, nominating the first African-American female to the Supreme Court, some of the things that Congress and his administration have done as it relates to competition with China. But he's also going to have to acknowledge the fact that there are fears among voters about inflation. And then, of course, with the backdrop of all of this geopolitical uncertainty, to Greg's point, this is President Biden's wheelhouse. This is where he excelled. Cold War politics in the 1980s and early 1990s. Again, was sort of his forte when he was on Capitol Hill. So this is where he is comfortable. It's just a question of what Americans really care about. And according to the polling, this is not necessarily the #1 priority in Americans' minds.
Which goes really, Libby, to this point that John and Tom were talking about earlier, which is gas prices rising to the highest levels, AAA unleaded to the highest prices since 2014. And how many times when you press Control Find are you going to see inflation in this speech? How does he talk about the inflationary pressures, combating them, while also talking about the sacrifices here in the U.S.? I mean, for example, that strategic petroleum release is 60 million barrels, right? And that only accounts for 6 days of Russian output. How much can they really move the needle on this?
Right, and I think this actually underscores the bigger issue, as you point out, is that the president himself actually has very little to do with inflation. Of course, it's the Federal Reserve, which he does have a part in terms of nominating folks, but in terms of the actions that they can take, obviously releasing oil from the Strategic Petroleum Reserve is one of them. I mean, they could potentially lift tariffs. That could be sort of helpful incrementally. You can also try to address the supply chain. I think he'll talk quite a lot about that actually tonight. As part of their China competition bill, there's some funding for the supply chain. There's things that they could do in terms of deploying the national reserves to, say, help with trucking and with the ports. But all of these are incremental, as you point out. These are all very marginal. They're sort of, eating around the edges. But in terms of sort of the dramatic things that voters want, again, the point is that the president just doesn't have that lever that he can pull. Now, he has the rhetorical lever, and I think he will try to sort of lean into that as much as possible today. But in terms of his actual policy actions, they are quite limited.
Libby, we've heard a couple of months ago President Biden coming out and pointing the finger at the Federal Reserve, saying it's on them that inflation is so high. Now we have people pulling back from expectations that the Fed will tighten policy as quickly as they were before. Do you expect a similar tone from President Biden, or will he pull back and really try to hit this nuance that says not that much?
Yeah, I mean, this whole situation in Ukraine is putting the president in sort of an awkward position. It's also putting, of course, Chairman Powell in an awkward position. You're right that the market's obviously taken out the 50 basis point hike in March. We always were sort of skeptical that the Fed would move forward with that anyway. They didn't really want to do that before this Ukrainian situation, regardless. But this is putting Powell in sort of a tricky spot. I do think that Biden really, again, he's an institutionalist. And I think he will yet again delineate the sort of the independence of the central bank, the fact that Powell will make his own decisions. But yeah, I think he will, of course, underscore the fact that inflation is an issue and that he expects the Fed to act. But again, right now, in terms of the market backdrop for the Federal Reserve, this is a dicey situation for them to navigate.
Libby, you are so wired in Washington. We talked to Tony Crescenzi the other day, and he's looking at $5 a gallon out in Newport Beach, and we're unsure of Crescenzi's future. But Libby, you are in Washington. What is the tone on refugees? Is there any discussion that the president can mention tonight of the tens of thousands of Ukrainian refugees that America will accept?
Yeah, I mean, it's a great point. I mean, obviously, Europe is going to have to navigate that much more than the United States. This is a tricky, issue for Biden, just in terms of the politics. Obviously, immigration has become, really a loaded issue. But Tom, I think it's a good point. I think that Biden will try to appeal to sort of the humanity of American voters. And if and Americans actually, in terms of polling, they do think that America should increase their refugee cap. So yeah, you absolutely could have a mention of that. But again, I think his focus will be abroad, but for the most part tonight, we should expect a focus on sort of the domestic situation and how his administration plans to tackle it.
Libby, you are one of the very best. It has been too long. Come back soon. Libby Cantrell there at PIMCO. Thank you. Thank you very much. The Devon Energy CEO had this to say on energy in this administration. Take a listen to this quote, Tom. "I'm a little mystified that there hasn't been some dialogue," implying that if the administration had reached out to them, perhaps they could pump some more crude. He said this, Tom: "If they were to reach out and maybe be a little more collaborative, it might provide some cover." Talking about cover from investors here. The investor base, of course, does not want them to invest more to pump more crude in the same way they did 5-10 years ago, Tom. That story's changed. But just that line, "I'm a little mystified that there hasn't been some dialogue." How much outreach has there actually been? Has there been any at all from the administration to the oil patch in America to do more to help them?
I think it's moving in such fast speed that everybody's making it up as they go, John. Maybe there is in the backstory and we haven't heard it. Maybe there'll be in the coming days. But the seismic things, John, the switch in Germany, Switzerland giving up
I'm with you, Tom.
neutrality. Those
the
are the
situation
things
with
I'm
crude.
focused on.
That story's not new. That story's not new. It's months old. Months and months old.
John, personal note, and
Sure.
it was 30,000 people in about 1957-58. Operation Safe Haven from Hungary was seared in my memory. I was directly affected by that, with kids down the street with no money, no belongings, no nothing in the neighborhood helping out.
Big push in Europe, Tom. Big push in Europe. You see some of the surrounding countries doing a great deal to take Ukrainians in.
Yeah.
Are you saying the story's absent in Europe or just absent here in America?
I think it's going to be on light speed, and I don't buy the number 500,000. Maria Tadeo in Poland mentioned that the number could be way, way higher. The president has to address that tonight.
If you are just tuning in, a couple of headlines to get up to speed on at the moment. One was from Interfax, Lisa. Russians saying that they will continue the Ukraine, quote, operation, their word, not mine, until their goals are met. Their goals a week ago was to change the leadership and to demilitarize the country. Lisa, are they still the goals now?
You know, that will really speak to how violent this will be. I mean, that's the big concern, is what's the off-ramp for Vladimir Putin, because his goals are not going to be met until the president is taken down, and that is not what anybody wants to see in Ukraine or Western nations.
Futures down 0.6% on the S&P, on the NASDAQ too. Big bid in the bond market worldwide. Core government bonds rallying hard. Yields down by 8 basis points on 10s. We saw 2 not too long ago, and now back in the 170s, 174. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with The First Word, I'm Ritika Gupta. The European Union is discussing more sanctions against Russia today. It now seeks to block 7 Russian banks from SWIFT, the system that facilitates international payments between institutions. That's according to a draft list of the proposal. One of the banks is VTB, which is one of Russia's largest. The UK has also imposed sanctions on VTB. And the mayor of Ukraine's second largest city, Kharkiv, calls it a war to destroy the Ukrainian people. Russia stepped up its shelling of key cities in Ukraine overnight. The Kharkiv mayor says the residential areas are being hit, even though Moscow says it's only going after military targets. Meanwhile, a large convoy of Russian troops is slowly closing in on the capital, Kiev. Democratic Senator Joe Manchin wants the Biden administration to encourage more domestic energy production. Manchin says it's ridiculous that the U.S. buys oil from Russia, and he's planning weeks of hearings on energy independence. There are signs that the war in Ukraine is boosting demand for cryptocurrencies. Bitcoin rose as much as 6% and traded briefly above $44,000 for the first time since February the 17th. Some bulls say that Bitcoin could start trading more like a hedge to geopolitical instability and inflation. In the UK, Chancellor of the Exchequer Rishi Sunak is being pressured to drop a planned increase in payroll taxes. One of the country's biggest employers group, Make UK, says it will cost jobs and should be scrapped. Other business lobbies have warned that tax hike will make the escalating cost of the living crisis worse. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
City. In London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
So recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
of the measures taken by the EU and the international community to sanction Russia, we cannot exclude that Russia will take retaliatory steps that will impact energy trade.
That's the next one to watch, isn't it? What is the retaliation from Russia to the sanctions introduced over the weekend coming into this week? That was the EU Energy Commissioner from New York, with futures down 33. We're negative 0.75% on the S&P. On the NASDAQ, we look like this. We're down 0.8%. In the bond market, 10s, what a turnaround. 173 on a 10-year yield right now, down 9 basis points. On Friday's session, Tom, 2.01% was the high. We've moved 30 basis points. Just like that.
Yeah, what are you looking at, John? You mentioned German 10-year earlier, just tipping negative as well. I guess the 30-year bond to me in the U.S., the shock of that getting under 2%, we're not there yet.
I'm looking more to the front end and just the fading of rate hikes. For Europe, it might make sense. For the Federal Reserve, does it? Does it make as much sense? That's what I'm focused on, Tom. We're really pushing out that story, fading it in a major way in just a couple of trading days.
Equity's fading right now. I noticed that 2 standard deviations on VIX this morning. This is a global Wall Street statistic. It's just under a 33. We're not there yet, 31.97. That's sort of one of the morning targets for the equity market on Wall Street. This is the conversation of the day on oil, as we had the privilege of speaking with Daniel Yergin yesterday. Kevin Book joins us now, co-founder of Clearview, his work at Tufts with a number of degrees, but also the secret that Rousseau and Book write the note in Washington every morning on hydrocarbons. We're thrilled he could join us from Clearview this morning. Kevin, thank you so much for joining us. I want to go right away to the 3,000-mile distance between Moscow and Riyadh. What will break there?
Well, there's a talk from all the capitals in the West that there's going to be a strategic reserve draw. There's negotiations in Vienna, different capital, about an Iran deal. So Riyadh is holding fast right now. OPEC Plus is saying they're going to stick with the gradual pace they've been going. But show me a disruption, and I will show you Gulf Arab producers probably stepping into the breach.
Do the Gulf producers influence Riyadh, including Abu Dhabi?
Yeah, look, there's a challenge here. This deal was hard to make. The OPEC Plus deal, a tough bargain. You saw the oil war in March, April 2020. That's what happens when the bargain breaks. So nobody wants to disrupt the delicate infrastructure of that bargain.
Kevin, OPEC Plus is meeting starting today. They're going to release some sort of updated statement on production tomorrow. What are you expecting to hear from them?
Well, I think that my colleague Jacques Rousseau and I, as Tom mentioned, we've been looking at this from different sides. And Jacques still expects to see essentially the continued pace, the expectation that we're going to have potentially an emergency meeting, an option to come back at whatever they decide. So sticking with the plan, but keeping an option open.
How vulnerable are they to political backlash from the United States if Saudi Arabia, if the others do not increase production more, do not act in response to this as something that they can perhaps buffer in terms of how much prices rise?
Yeah, it's a really big question, Lisa. So historically, the No Oil Producing and Exporting Cartels Act, so-called NOPEC bill on Capitol Hill, has been one of the cudgels that Congress and most recently the Trump administration wielded to try to persuade production from the producers group. It's not something you're hearing so much about right now. Tough to go on bended knee with a knife behind your back. So I think there's a little bit more caution from Washington right now. But high prices bring out the worst in lawmakers. They go after producers after they protect consumers. A spike could bring back a lot of things, including NOPEC.
Kevin, how concerned are you that the U.S. is not looking inward particularly? And that's what we heard from the Devon Energy CEO basically saying, we haven't had any conversations with this administration. Are you surprised by that?
Well, in a way, no, because OPEC has the oil we can have right now. But in a way, yes, because if you think this is going to be over in a week or month, maybe you don't worry about the investment we're going to need to buffer the world for a sustained and protracted conflict. But this looks like this is going to be a rupture that lasts for years. So if we don't normalize relations with Russia, where are we going to get it? At home is a good place.
Kevin, I have to interrupt. We have video now. John, help me out here. This is Mr. Zelensky, obviously exhausted, speaking from Kyiv, and he's speaking, I believe, to the European Parliament. The imagery here, folks, on radio, it is a stark white wall with a flag behind and a clearly exhausted Zelensky. And Johnny will also have images here of the Parliament in Europe as well.
He has shown some incredible leadership over the last few weeks, Tom, and the pleas continue out of Ukraine to the West to do more. to help them more. There was this really phenomenal exchange that's taken place in Poland today between a Ukrainian reporter and the British Prime Minister. ITV reporting this one, Tom, and here's the quote. The Ukrainian reporter said, "You're coming to Poland, you're not coming to Kyiv because you're scared." And the Ukrainian reporter is basically begging the Prime Minister for a no-fly zone over Ukraine, Tom. The Prime Minister rejecting that, ultimately saying it will mean the UK has to shoot down Russian planes. And this is something we saw take place yesterday, Tom, in the United States as well, the same conversation.
And you wonder, Lisa, if Mr. Biden will touch upon that tonight, the delicate issue of the no-fly zone.
And what the exit strategy is for Vladimir Putin, and if they do necessarily destroy more of Ukraine, what the response will be from the West. Kevin Book, how are you looking at how high oil prices could go if this altercation continues, if it escalates, if Russia wants to see only its goals accomplished, which includes something that is unpalatable to Western alliances?
Look, we're already seeing essentially what we call a sanctions aura. Buyers confused, worried about sanctions, sticking with what they know, sticking back from Russian oil. Brent goes up, Urals goes down. We're probably seeing the first tip of the embargo wave when we look at Canada and the UK saying they're not going to buy Russian oil. But look, they've got the oil sands in the North Sea. U.S. is probably on deck to stop buying Russian oil imports at some point as part of a sanctions wave. But no one's going after flows yet. Russia could. If 7 million barrels per day of petroleum exports stop, or even if some portion of that stops, we're talking about a leap upward. You can't know exactly where the prices settle because you have the demand destruction hitting you on the other side of it. But we're well past 150 if Russia stops, headed to 200.
Heading to 200. Kevin, just some massive numbers out there at the moment. Kevin Book there of Clearview Energy. Thank you, sir. Brent looks like this. WTI crude 99.39 on WTI, up by 3.8% at the moment. Zelensky out of Ukraine, Tom, the leader of Ukraine, continues to say, without Europe, Ukraine will be alone. The agenda for the session today on macro financial assistance to Ukraine, a standing ovation for the Ukrainian leader taking place right now, Tom, in the European Parliament.
They're going to have to move, and they're going to have to move fast. I must admit, Ursula von der Leyen, for those on radio, providing applause as well. And John, they're moving at a new speed in Europe. It is all new for them. I really mean that with great camaraderie. They're not used to moving at this speed, and things have changed. And you wonder where we'll be even by Wednesday or Thursday, let alone into the weekend.
That man, Lisa, does not want a standing ovation, a round of applause. He wants more assistance, more help.
Yeah, and there he is leaving the briefing, and we heard that from him when the U.S. offered him amnesty, and he said, "I'm not looking for a ride. I need more ammunition." And that really speaks to the feeling in Ukraine right now.
Zelensky saying the EU would be stronger with Ukraine. Futures down 1% on the S&P, yields in 9, let's call it 10 basis points, 173 on a 10-year yield. WTI very close to triple digits, 99.45. Equities lower in Europe too. The Stock 600 down 2%. From New York City on radio and TV, this is Bloomberg.
That it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron? Because as we know, many parts of the world use different types of vaccines, and that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's not a bold statement to say that the world has changed fairly dramatically over the last couple of weeks.
There is a substantial tension here between growth and inflation.
Often what creates these liquidity shortages is just sheer panic.
When you look at the consumer, it is healthy going into this.
They're griping about inflation, but it doesn't seem to have that big of impact.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures down 0.9% on the S&P. In Europe, Tom, down even more.
Israel, wait to the tape. It's not that they're down, it's the way they're down, John. And there's just a weight to this as the news flow continues, mostly out of Russia and Ukraine, with all sorts of follow-on corporate headlines as well. But I'm just going to suggest, John, there's no bid coming in here today. There's just trying to find where we heading down.
Just moments ago, Tom, the Ukrainian leader pleading for more help, more assistance from the European Union, a standing ovation following his address.
Well, that's the news of the moment. The other news of the moment is a convoy that's 250 miles long or whatever it is. But the key attribute there from Sky News is it's 15 miles outside of Kyiv. And of course, everyone this morning, John, shocked by the missile hitting the regional government building in Kharkiv as well. So I would suggest it's a combination of military headlines as well as what we see in the Bloomberg world of economics, finance, and investment.
Lisa, that's the reality of the situation on the ground at the moment. The convoy heading towards the Ukrainian capital. Interfax reporting earlier this morning that Russia said to continue its Ukraine, quote, operation until its goals are met.
Yeah, and we're going to be speaking with Maria Tadeo shortly, and she's been talking about how the tone changed yesterday with attacks on civilian areas, a much more widespread number of attacks in Ukrainian cities. How does this end, and at what point do we see a further escalation in sanctions and in the flows of oil and gas that could disrupt markets perhaps a little bit even more?
Well, let's talk about the flows of money in this bond market. 10-year yield in Germany down 16 basis points. German 2-year down 15 basis points. In the US, 2s down 13. Lisa 10s down by 9. We're making a big bet in this market in the last couple of days.
Yeah, if you look at real yields on 10-year treasuries, you've seen that they've declined over the past 2 days, the most going back to April 2020. That is a really important time frame. That is when the Federal Reserve was printing money and trying to get in there to intervene. The bet is similar, although a very different nature given the fact that inflation is running so hot. And a lot of traders are saying the U.S. economy does not need more accommodation right now.
A bit more Fed speak coming through the week, including Chairman Powell. Futures look like this. We're down 0.8% on the S&P. On the NASDAQ, we're also down 0.8%. In the bond market, we've talked about it. 2% on 10s on Friday, now 173.43 and down 9 basis points on the day. Crude getting really close to triple digits, 99.80 on WTI. Lisa, up more than 4% today.
You know, something I was struggling with today as I was looking at the day ahead, it wasn't necessarily meetings about what's going on with the Russian invasion of Ukraine. How do you look at the nuts and bolts, the humdrum economic data coming in, hotter than expected, people going to the store, buying things? How do you look at that versus this massive tail and humanitarian risk that's going on in Europe? And yet that is what markets are trying to do. At 10 a.m., you get the February ISM manufacturing data for the United States. People are looking at the prices paid by a lot of manufacturers. How much are they continuing to increase? How much of a sense do they get that you continue to see supply chain disruptions? And how much do you get a sense forward-looking of how much the invasion in Ukraine is really going to affect things? We also get retail earnings. Again, it seems so dissonant to be talking about going to stores and buying things, and yet people are parsing through this for the economic momentum to withstand some sort of exogenous shock, like oil prices going to $150 or even $200 a barrel, like Kevin Book was putting out there as a possibility. Today, we're going to speak with Michael Fidelki, Target CFO, later in this hour, and then Michelle Gass later in this afternoon, Kohl's CEO, as we get a number of earnings from Kroger, The Gap, and Abercrombie & Fitch throughout the week. And at 9 p.m., President Biden is going to try to dovetail all of this, the economic pain that's being felt in certain places around the world and the economic momentum that has given way to such fast inflation here in the State of the Union that we get at 9 p.m. His approval rating has fallen to the lowest or about the lowest in his presidency. And again, that inflation read, you said this, John, Control F, inflation. How many times will it be there? Inflation running at the fastest pace in the United States going back to 1982. How much does he encourage the Federal Reserve to act at a time when markets are saying it's unlikely they'll have to act as actively as they did in the past?
I imagine if you don't hear that word a lot in the address, you'll hear that word a lot afterwards in the coverage, that's
Fair
for
point.
sure. Lisa, thank you. Emily Wilkins joins us now from Washington, D.C. In Warsaw, Poland, Maria Tadeo. Maria, from where you are today, the British Prime Minister makes a visit to Poland. Walk me through what he said, what you expect through the next 24 hours.
Well, he just reflected what is now the concern in Europe and pretty much across all of Eastern Europe, that the nature of this war yesterday in Ukraine really changed. You see a Russia that thought was going into a very quick 48-hour invasion, that the Ukraine government would be over and done with in 2 days, and now they're on day 6. And there is desperation, but also a Russian government that is running out of patience, and that means that they're hitting every possible target, not just military, but all kinds of residential, local government facilities and buildings, and all of this is now showing a very brutal face of this war. The nature of the war changed yesterday, and there's very real concerns. I don't want to speculate about this, but there's very real concerns that the next 48 hours could be incredibly ugly, because what we see is Russia running out of patience. They want this done, and they want it done quickly. And you saw there, they say we're not leaving until we meet and comply all of our goals. And that means complete surrender of Ukraine and the Zelensky government out and over with.
For those of you on Bloomberg Radio, it is a bundled up Maria Tadeo in the cold of Warsaw on a March 1. And behind her is one of the great symbols of Russia and Poland. And of course, Maria, it is the palace in Warsaw that Stalin built for a flattened Warsaw years and years ago. It is a huge symbol and tension in Poland. Tell us about Poland and Russia. Is Poland the near abroad like Ukraine, or is Poland like Germany, the far abroad?
Well, what I would say is that they have a very distinct history. It's not that of Germany, and it's potentially much closer to that of Ukraine. Remember, Tom, for history, for the past probably 100 years, they've had an incredibly difficult relationship with Russia, perhaps going to the Nazi-Soviet pact. There is a shared history, but also a lot of, I would say, remorse, and a lot of history that they view was detrimental to Poland. And right now, when you speak to Poles and the Polish government, they tell you that they view Russia as their #1 threat, and that once again they're concerned and they worry that we're seeing a repetition of history, and they stress, listen to us, we've seen this firsthand in our history, listen to us, we need more sanctions on the table, and Ukraine needs more weapons. This cannot be an easy ride for Russia, otherwise after that all bets are off. The other thing I would point, Tom, as you say, what you see behind me is the gift from Stalin. That is how it's known, but every night it has a Ukrainian flag over it. You see the blue and the yellow of Ukraine, so this tells you the tension this country has cut between Russia, Ukraine, and now, of course, the Belarus border. There's a lot of concern about that border. Remember, at this point, what we see is troops going into Ukraine. The Poles are concerned that this is now a puppet state of Vladimir Putin, and they're surrounded by a war-torn Ukraine, and now Belarus that is not independent, that it's in the hands of Vladimir Putin.
Emily, we hear the urgency in Maria Tadeu's voice as she talks about the escalation in fighting, the escalation in death. Is there a change in the rhetoric in Washington, D.C. around the steps needed, the steps willing to be taken?
I think we saw that shift over the weekend, and President Biden is certainly well aware that there are many Americans out there who feel like he has not been aggressive enough when it comes to the U.S. Giving assistance to Ukraine and pushing back against Russia. So that's going to have to be something that he addresses in his speech tonight. You are seeing this rare moment of bipartisanship here in Washington around this issue. I mean, former President Trump aside, you really are seeing Republicans coming out criticizing Putin, saying that more aid needs to be given to Ukrainians. And I think a lot of it's just a question of tone. What we are going to hear Biden say tonight, if he's going to touch on potential sanctions to the energy sector, that's something the White House does not want to do because they're still worried about that global recovery, as well as high gas prices in the U.S. A lot for Biden to do tonight. White House Press Secretary Jen Psaki says no one wants a 2 to 3 hour speech. True enough, but at the same point, there's a lot to touch on because Biden can't just touch on the international. He also has to touch on the domestic.
Emily Wilkins down in Washington. Thank you to Maria Tadeu in Poland today. Maria, thank you very much for all your hard work. There are some headlines crossing the Bloomberg on freezing funds. At the moment, in many places, we don't have a market to express this, including in Russia itself, with the market closed again. Yesterday, JP Morgan closed the gates on its JP Morgan Emerging Market Europe Equity Fund and Russia funds as well. Tom, we got a headline from Schroders about 10 minutes ago.
Well, straight down from 40 down to 20. This has been something with huge, huge losses, well under $1 billion of assets. It's not a big deal, but John, it is the microcosm, the little drips here, the micro data we're seeing here. It's not about SWIFT. It's not about Bank of Russia. It's about all the little decisions that we're covering.
It's setting a market, Lisa, really difficult in an environment like this one. You saw the depository receipts in London trading yesterday for some of the names like Sberbank. Sberbank was down 74% on London trading on that depository receipt. Just unbelievable moves.
How much is this also because it is one of the only areas of liquidity in a market that otherwise is non-existent? I mean, there is no trading in a lot of the securities of Russian assets. So if you're in a fund that holds these securities, yeah, you're going to freeze it because if people withdraw money, how are you going to sell the underlyings to give them their redemptions?
Dollar ruble, 101. Let's call it 102. Lisa, is that a proper market right now? Jane Foley said no.
Well, I mean, really, am I going to go against Jane Foley or any of the data coming out where people are basically saying this market's been frozen, they've been closing the exchange, the bank is basically taking all actions necessary. The question really is, what would the ruble look like if it was a free market right now?
That's kind of what I was suggesting. I wasn't asking you to go against Jane Foley, who's a wonderful friend of this program.
Well, you know, I thought it would be an easy way. I don't really know. I mean, I don't know how much it would tank. Do you?
Futures down 0.7% on the S&P. I don't know either. The Nasdaq down by 0.75%. From New York City this morning, good morning to you all. There is a bid in this bond market. Yields are lower by 11 basis points to 172. We were 30 basis points north of that just a few trading days ago. Just an unbelievable turnaround as we start to price out more rate hikes at the Fed and the ECB as well. Crude very close to 100, 99.94. Call it 95 on WTI, up by more than 4%. From New York City, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Russia is vowing to press on with its attack in Ukraine until its goals are met. A large convoy of troops is slowly moving towards Ukraine's capital. Meanwhile, the mayor of the city of Kharkiv says residential areas are being bombed, and United Nations agency is reporting more than 100 civilian deaths and says there could be more. The European Union is discussing more sanctions against Russia today. It now seeks to block 7 Russian banks from SWIFT, the system that facilitates international payments between institutions. That's according to a draft list of the proposal. One of the banks is VTB, which is one of Russia's largest. The UK has also imposed sanctions on VTB. And the White House has shifted gears for President Biden's first State of the Union address tonight. Originally, the president was going to highlight the improving coronavirus outlook and rebrand his domestic policy priorities as a way to lower costs for families. Now the speech also will highlight the Russian invasion of Ukraine and nuclear saber-rattling by Vladimir Putin. And in other news, shares of Target are soaring today. The discount retailer reported a jump in fourth quarter earnings. Target says its results will continue to improve on top of the pandemic-related boom that has already led to strong gains. Wall Street had expected operating profit in the current fiscal year to decline. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is totally the decision of the management of each company after carefully taking all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's individual circumstance and decisions.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio. Tonight,
we're ready to respond decisively.
Bloomberg brings you live coverage of the State of the Union address.
America is back to work.
Hosted by Joe Matthew.
Inflation is kind of the #1 talking point so far.
Reaction, analysis, and what it means for Wall Street.
He did leave this door open.
Those are the words Democrats wanted to hear.
Biden may get a little bit of a lift on this.
The State of the Union address, followed by the Republican response. Coverage begins tonight at 8:30 Eastern.
Sanction says I cannot do business with you. A SWIFT thing says I can't use a communication to do business with you. I can still do business with you. And there are a lot of workarounds on SWIFT, so they're different tools, but used for different reasons.
It was Jamie Dimon at JP Morgan on the situation with banking sanctions and the swift ejection that we've seen in some places with some carve-outs. So much nuance there. How will it work in practice? Futures down by 0.8% on the S&P. On the NASDAQ, we're down by 0.9%. Into the bond market, down 11 basis points on a 10-year now to 170, 173. I keep saying this. A couple of days ago, we had a two-handle on a 10-year. Now 170, 190, just about holding on to 170. Chancellor Scholz, speaking of comments, speaking of reporters in Berlin right now, telling Putin to immediately remove troops from Ukraine. You can see it in the dialogue. The rhetoric is still very, very punchy out of Europe, Tom. But where do you express some of this? Look to European banks. Raiffeisen is down another 9.4% in today's session.
No.
SocGen's down 6.5%. Deutsche Bank's down by 5.8%. It's the 1st of March, and Raiffeisen is down 50% year to date.
And what I would say on television and radio, with John, Lisa, and I wired up here with all the aggregation we have, John, is it is a movable feast of headlines. This is truly a developing story, John. This is from Reuters, and I've also got it from the Express in London, where diplomats in Geneva at the UN Human Rights Council meeting, this was a remote from Lavrov of Russia, and they stood up and walked out. It was dozens, maybe it was more than dozens. But again, it's that kind of movable feast of protests that we're seeing.
And how these multilateral institutions will actually function, Tom. We talked about the Security Council of the UN last month, chaired by Russia. Chaired by Russia as they were discussing Russia.
Yeah. And, well, that's true, but I'm just this morning, and John, do we agree that the tape has deteriorated in the last 5 minutes?
Oh, sure, we're down almost 1% on the NASDAQ now. And this bit into the bond market picking up too.
Yeah, Euro Swiss is showing that gold 19.24 the ounce. On the equity markets now, Anahan equity strategist, Wells Fargo Securities. Anna, what have you done with your allocation? What have you done with your enthusiasm for stocks given this war?
Well, we are looking at stocks and within the equity market. Where do we go? The safe haven trade, the low volatility, or has that sort of already moved and too late? For those who've missed it, where we're looking actually is a more offensive play. A little, a little more risky, but at small cap growth, especially with a bit of a stalling in yield. I think that's going to help what looked like an oversold sector have a short-term tactical bounce.
Do you see any erosion to earnings? I mean, we can talk all day about nominal GDP and what we're going to see at the revenue line, et cetera, but do we continue the earnings surprises that we're seeing witness Target today?
Well, you're seeing some good news, but I think overall at the S&P 500 companies, you're seeing margins decrease. And that's something that we sort of expected as you get later in the cycle. And now with the war going on in Russia and Ukraine, we do have some of our larger market cap companies, more international, with more exposure to that situation. I think that it is going to feed back and margins will continue to come down. That's really the move that happens as we get later in the cycle. And that's going to change how we look at at things in 6 to 12 months if you tack on top of that how the Fed is going to move.
Meanwhile, right now, German Chancellor Olaf Scholz is speaking with reporters in Berlin, talking about how he would like to see Putin immediately remove troops from Ukraine. A lot of people, particularly in the allied nations, would like to see this as soon as possible. There is a feeling in markets that this will be a temporary blip. And there is a feeling in political circles that it could be something vastly more, that it has a different tone to it. Anna, how much does that factor into your bullishness, your sense of optimism here, that you expect this to be like other geopolitical shocks and have an end to it not so far in the future?
I think it's a big factor, really, in how we're looking at things. But that's also why we're paying very close attention to every headline coming out, just like everyone else. But the big factor here is how this feeds back into inflation. It's a unique situation because of Russia and Ukraine, their ties with oil and natural gas. How that inflation measure feeds back and then controls how the Fed reacts, and overall how that controls our consumer demand. You have to realize that the Fed hiking may address our over demand, but some of the big drivers of inflation that we're also trying to grapple with are things that aren't directly addressed by rate hikes. There's something that we're going to see need for more supply in energy from, or more easing in bottlenecks in supply chain. So when you put all these things together, it's one real big hairball.
Well, right now, if you look at Brent at 103, north of $103 a barrel, what's the trigger point for you to start getting more bearish, for you to withdraw some of your optimism?
I would say for us to really go towards a bear case would be that we see an escalation, an extreme escalation, a prolongation of the situation with Russia and Ukraine. I think on top of that, you'd see potential signs that inflation is getting away from us, that it's getting away from the Fed, and that would really zap confidence, I think. You're already seeing consumer confidence and forward-looking expectations sort of deteriorate despite current conditions looking okay. So once the consumer really starts to believe that the Fed no longer has a handle on inflation, I think that's a situation we look more bearish at.
Anna Han of Wells Fargo. Anna, as always, thank you. I wonder how close we are to that scenario. Lisa, given how much we're pricing out right now in this bond market of the Fed acting, the ECB acting too.
Basically saying that the inflationary pressures are going to stay there, because when you look at real yields, basically what that's saying is that inflation expectations have not come down. Yields have come down because they think that the Fed, they think that the ECB is going to be perhaps more dovish, but it will not bring down inflation. They will not be able to engage with that. So at what point does that become something really problematic for markets, which is real yields lower and stock markets lower too?
They've tried to insulate energy for now. I stress for now, because the US have suggested energy is still on the table when it comes to sanctions. Chancellor Scholz saying he's certain to add more sanction to those already announced. We've already seen the energy companies start to make a move. BP, then Shell. Shell said this, Tom, Russia's senseless act of military aggression. Their quote. Bruno Le Maire in France has got to talk to Total apparently a little bit later this afternoon, because Total are staying in Russia, Tom. They're just not going to have any more new investment. That's their move. Their move is very different to what we've seen from Shell, from what we've seen from BP. Lisa says so far, because I wonder how much pressure built on them to do more.
I would give that time. I'm in the so far camp, except I can't translate it into French. What I see, John, markets on the move. We've got a nice lift up here in Brent, 103.35, not up through the recent highs, but nevertheless, some tension in the tape there. And John, the U.S. real yield speaks volumes about this inflation persistency.
Nominal yields as well. We were in the 160s on twos right now, just south of 130 briefly. 130 on twos at the moment, down by 13 basis points on a 2-year in America, going into Chairman Powell later this week. A ton of Fed speak, a March 10th CPI print, and a March 16th Fed decision with a dot plot for 22. It's going to be very interesting. From New York, this is Bloomberg.
this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
2 months of losses on the S&P as we kick off March. More losses for you. Futures are negative, down 0.5% on the S&P. On the Nasdaq right now, down by 0.6%. Just about off session lows, but the move in this bond market, huge. Switch up the board and take a look. Let's look at US 2s and 10s and Germany as well at the front end and further out along the curve too. Your 2-year in America was through 160 on Friday. That was the high of the session. Your 10-year in America was through 2% on Friday, the high of the session. Here we are looking at 174 on 10s and 130-ish on 2s. It's a massive turnaround. And take a look at the front end in Germany as well, down 13 basis points. The 10-year back into negative territory, down 14 basis points. Tom, there is a big bet emerging in this market in the last couple of days. It's that the event of the last week, the events of the weekend, mean the ECB has to push out their rate hiking plans and the Federal Reserve has to trim theirs. That's the bet. Is that how it plays out?
Well, we don't know the bet yet, John. We got to wait for economic data, and we've also got to wait for these events in Europe. What we can say is, John, it's March 1st, and the path to March 16th is going to be extraordinary.
We've got a payroll story later this week, Lisa. We've got a CPI print March 10th, then March 16th. I get it. 50 basis points, maybe you can push that one and put it to bed. Rate hikes for the year, can you put all of that on ice at the ECB, perhaps for the Fed, Lisa? For the Fed, can you?
Well, if you do, is that basically saying that inflation, given where expectations are and that they have not come down, the Fed does not have control, and that right now the Fed's job is simply to prevent any kind of disruption in markets, while inflation is controlled by something totally other, and that has consequences, a lack of Fed control over inflation.
The consensus comes from 7 down to 5. We'll see. That's the bond market move. Let's talk about crude briefly. WTI and Brent. Brent, triple digits. We got comfortable with that yet? 103. WTI, Tom, back into triple digits. 100 and up 4.6%. As we talk about the President's State of the Union address a little bit later, gasoline prices, inflation.
Well, that's going to be the report. And, of course, we saw the surprise from Italy this morning.
And the flows of commodities around the sanctions story. That's where our focus is over the last couple of days. And I imagine it will be there for the next several weeks as well. That's the cross-asset price action. Let's get you some single names and say good morning to Romain. Good morning, Romain.
Hey, good morning, John. The volatility of which we ended February, well, that's continuing here on the first day of March, at least in the pre-market. A lot of the names that moved higher or lower over the last couple of days on the back of the Ukraine war, those are the same names that we're seeing here in the pre-market. Travel stocks, again, on the back foot. American Airlines, down only about 0.5%, but pretty much all the airlines, hotels, and any sort of travel company with a big international exposure, pulling back once again here. The banks also lower here on the day. Citigroup down 1.5%. 1.5%. Remember, most of these big banks dropped 4 or 5% yesterday. A lot of people now rethinking the rate environment, a rate environment that had been priced in at least into one direction just a couple of weeks ago. People now moving in the opposite direction. And a lot of the energy stocks continue to rally. We had an interesting interview from the CEO of Devon Energy yesterday who said that he hasn't actually spoken to anyone in the Biden administration, but he said they do stand ready to boost output if they are given the political cover to do so. Outside of the initial orbit of what's going on in Ukraine, we did get earnings out of Target. They were impressive. The shares are higher by about 12% here. Most investors seem to be gravitating to the company's guidance for the full year, which was a little bit better than street consensus. Chevron shares higher by about 1%. We're going to have the CEO of Chevron on, Mike Wirth, in the 4 o'clock hour. That company doubling its share buyback plan. And the CEO of GoodRx also going to be with us in the 2 o'clock hour. They just reported earnings. Shares are down 32%. Not good.
Romain, thank you so much. Greatly appreciated. Very quickly here on Bloomberg Radio, diplomacy in action. This is going worldwide right now, almost on a viral basis. The European Parliament listening to Mr. Lavrov by remote, standing up and walking out. You wonder where this goes in the coming days. Of course, the Prime Minister of the United Kingdom in Warsaw as we speak. Let us move on to our interview of the day on foreign exchange with Kamakshya Trivedi of Goldman Sachs. We're thrilled that he could join this morning. Kamakshya, very simple. Where is the true valuation of ruble?
Good morning. Thank you for having me. I mean, this is the kind of situation where, fundamental valuations are very hard to do. I mean, you can think about things like Russia's oil and gas exports, its current account surplus, its reserves. None of these things matter at a time when a large quantity of the reserves are sanctioned. Essentially, the sanctions are making Russian assets uninvestable for most Western investors. And they're making, valuations and fundamental valuation calculations pretty much impossible as well.
Can you use adjacent ratios to come up with some form of guesstimate of dollar ruble right now, moving out from, my eyes are failing me here, from a 101, 102 right now? Can we dare say 115 or 120?
Look, it all depends on how things evolve. If you look back to the period in 2014-15 when you had the annexation of Crimea, hostilities in the Donbass, and a halving in the oil price, you saw, a huge sell-off in the ruble, nearly, 50% or so. And that came along with a drain of central bank reserves of something like $100 billion. That kind of drain or that kind of decumulation in order to support the ruble is just not possible today. So again, I think that, one can come up with, maximum undervaluation numbers or things like that, and we are well through those points at 115 or whatever it is. But I just think at this point it's not. You need to see some crystallization of the risks. You need to see some sense of the end point here before you can put a firm value that this is kind of as far as it goes and no further.
In the meantime, Kamakshya, what we're seeing is nodes of liquidity amid the sea of illiquidity that is the Russian market for all assets. Where are you seeing the most dramatic ramifications, the most dramatic moves, simply because it is the only place that people are using to offset some of their other bets that potentially could be an overshoot if things do come to some resolution in the near term?
That's a very interesting question. I think that is really one that investors should be asking themselves as well, right? I mean, Russian assets, as I said, the sanctions are making them very hard to touch. But there are the whole host of other assets that may be affected by what is going on in Russia and Ukraine, and where at some point there may be a more interesting opportunity. I think the most significant risk premium is being put in the assets that are closest to the theater of conflict, parts of Central Eastern Europe, Poland, Czech Republic, Hungary, the equities, the currencies in those regions. And those are places where if you saw some stabilization, some cessation of some ceasefire, I think would probably see some of the biggest recoveries and the fastest moves. And I think then there are assets that are pretty far away from that. If you think about oil-producing countries like Colombia and the Colombian peso, or the Middle Eastern oil producers, the credit spreads on those, I think some of those things could be have already been pretty resilient, but could see more outperformance in a world where the hostility cease, but oil prices are still meaningfully higher.
Kamakshia, you are an economist at the Bank of England. You understand the interplay of oil prices and growth and how the combat for inflation can transpire. Do you think that markets have gotten ahead of themselves in pricing out possible rate hikes from either the Bank of England or the ECB or even the Federal Reserve on the heels of this conflict?
I should say I was an economist at the Bank of England many, many years ago. Now, obviously, a strategist at Goldman Sachs. But look, I think the markets are trying to price a very uncertain situation. And I think what is really happening is that markets are implicitly making the assumption that the tightening in financial conditions that is needed to bring inflation down, some of that tightening is already being delivered by the move higher in commodity prices and oil prices. I think that is sort of what the market is pricing, and I think that's why you're seeing the interest rates, the yields move down. I think that, our view is that you will still need to see considerable tightening, especially in places where, as I said, the growth impact from this conflict may be relatively limited, but the negative shock from oil prices to inflation might actually be quite meaningful. So it's understandable why markets are doing what they're doing, but I think it may be a bit too fast, and I think you're probably still going to see major central banks, at least in the near future, continue to be on a tightening trajectory.
Kamakshia, great to catch up with you to get your perspective, some really important thoughts on what's going to happen with this currency. Kamakshia Trivedi of Goldman Sachs, thank you, sir. Just a headline, Tom, coming out of Interfax. There is an internal sea that feeds into the Black Sea, Tom, and the Russians are given the impression that they've cut it off to the Ukrainian army.
This is very important. It is to the north of Crimea, of course, going back to the battles of 2014. And Admiral Stavridis, among others, will tell you the Sea of Azov is extremely important. The city by the sea there, John, is not Odessa. That's far down to the south. It is Mariupol. I hope I'm pronouncing that in the proper Ukrainian way. And very clearly here, within the zeitgeist that's out there now, I need to be very careful about attribution. They have lost power in Mariupol and are under some form of attack. That would be the closing, John, of the territory of Russia from Crimea around up northeast and from Donetsk down south as well, closing on the northern shore of the Sea of Azov.
Crude breaking out a little bit more here, 5.8%
really moving.
on WTI, 101 now, Lisa, 104 on Brent, up by 6.6%.
Basically gaming out what happens, what's the Western response should this report bear out if Russia is making further incursions into Ukraine and trying to take over Kiev. What is the response? At what point can oil not remain out of the crosshairs, and do we get to what Kevin Book was talking about, some sort of cessation of the flows, which leads to substantially higher oil prices?
Doing our best to keep you on top of the headline flow as well. The EU to give 500 million euros in humanitarian aid to the Ukraine. That headline just crossing to the European Union to give 500 million euros in humanitarian aid to Ukraine. From New York City, futures are lower. We're negative 0.8% on the S&P. On the Nasdaq, we're down by, let's call it 0.9%. Over in Europe, the bank's getting hammered again. In Frankfurt, Germany, down by 2.75%. On the equity benchmark in Frankfurt, the DAX getting hammered, and that move in the bond market down 9 basis points on 10s to 173.43 after seeing 2% on Friday, and 2s down 12 basis points to about 130 going into Chairman Powell later this week. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Mariska Gupta. The mayor of Ukraine's second largest city, Kharkiv, calls it a war to destroy the Ukrainian people. Russia stepped up its shelling of key cities in Ukraine overnight. The Kharkiv mayor says that residential areas are being hit, even though Moscow says it is only going after military targets. Meanwhile, a large convoy of Russian troops is slowly closing in on the capital, Kiev. Democratic Senator Joe Manchin wants the Biden administration to encourage more domestic energy production. Manchin says it's ridiculous that the U.S. buys oil from Russia, and he's planning weeks of hearings on energy independence. In the UK, Chancellor of the Exchequer Rishi Sunak is being pressured to drop a planned increase in payroll taxes. One of the country's biggest employers group, Make UK, says it will cost jobs and should be scrapped. Other business lobbies have warned the tax hike will make the escalating cost of living crisis even worse. And Hong Kong reportedly will impose a lockdown to ensure a mandatory coronavirus testing drive this month is effective. That's according to local news media. Reports say officials will test the whole city 3 times over 9 days. In the last few weeks, the number of COVID cases in Hong Kong has ballooned from a few hundred a day to more than 34,000 on Monday. An international boycott of Russian vodka is building from the US to Australia. At least 3 US governors ordered the removal of Russian-made or branded spirits from stores. The steps may be largely symbolic. Vodka from Russia accounts for little more than 1% of the total value of imports of this spirit into the US. Global News 24 hours a day on air and on Bloomberg Quick Take. I'm Ritika Gupta. This is Bloomberg.
Has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's 2 things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
see consumers still willing to go out there and spend. They're griping about inflation, but it doesn't seem to have that big of impact on their spending right now. And ultimately, they still have barely touched those excess savings.
Sarah House there of Wells Fargo from New York City. Good morning to you. Futures are negative 0.7%, lower by 0.75% on the NASDAQ. It gets your attention, it gets ours. The move in the bond market, yields lower by 8 basis points on 10s to 174.20. Let's call it 174.50 and round this up. The stories at the front end as well, though, as we start to fade out the prospect for more rate hikes from the Federal Reserve and do the same for the ECB, potentially kicking out any action from 22 and back into 23. Crude north of 100 at WTI, 105, Tom, on Brent. What a move we're seeing in the commodity market this year.
John, I got to stay on this for a minute. I want to make clear here, we're seeing tape deterioration and correlations are falling apart. And John, I'm going to go out to 10-year real yield, negative 0.92. We've mentioned Brent crude out 104, 105. And John, Swissy even showing Euro Swissy down to 1.0247. I mean, these are markets correlated and with a real weight.
Quite a morning, 133 on twos, Tom, from 160-ish last week on Friday, down 10 basis points on the day. I keep saying it's quite a week for this move because we've got Chairman Powell later this week, a CPI print on March 10th, March 16th, and for all the banks lined up for a 50 basis point move in March, I think is Citi at the moment, I haven't seen them throwing the towel on that in a big way. In fact, Goldman still thinks 7 hikes this year. And they threw in an extra hike for next year in the past 24 hours too.
It is a movable feast, and we will have to see. Right now, what we're going to do is link a Russia surrounded by, 14 nations, to an America surrounded by 2 with great commonalities with Canada and Mexico. One company that has done that over the decades in North America is Target. Let's get your attention. Target has beat Walmart by over 600 basis points per year in the last 10 years in the name of Global Wall Street. That is success. Their chief financial officer, Michael Fidelki, joins us this morning. Mike, I'm going to cut to the chase. The president will speak tonight on $104, $105 Brent crude. You spoke today with $24 per hour on your wage. How are you going to do this at $24 an hour, a blended $48,000 a year for line employees?
Well, I'll tell you, the investments that we make in our team from my seat are the best investments that we make. And that's been a path of investment over years now. We laid a path to get to a $15 starting wage back in 2017. Yep. Accomplished that a couple of years ago. We've invested in additional benefits. We've invested in tuition-free education assistance. And we see those investments paying off. You can see it in the results that team delivered in our fourth quarter with growth of 9%.
Just because of time, I don't mean to cut you off, but I think this is so important, Michael, because you led on this, and you, and I'm going to say Amazon, Jassy, and the rest are in the crosshairs on this. Are we having an arms race right now for line employees?
It's definitely a tight labor market. But our story might look different than what you'd hear elsewhere, in that we track our ability to attract and retain those metrics really closely. Those metrics are stronger for us right now than they were pre-pandemic. So we see the result of that investment over time really paying off with a team that wants to come to work at Target, and that best team in retail is delivering.
Michael, this is one side of the equation that you have a bird's eye view on, the employment aspect. The other side is consumers' willingness to keep spending at the same pace, even as they see their price of gasoline rise to the highest level since 2014, even as wheat futures rise to the highest since 2008. How do you game this out when you talk about pricing, when you talk about passing it on to the consumers and your ability to do so? Is time running out to keep passing it all on directly?
Yeah, we certainly see the inflationary cost pressure in the environment, but we tackle that really through the lens of our guest. We're fortunate. We have a lot of levers to pull within our business to make sure that we're protecting value for our guest, and price is the lever we pull last, not first. And that investment in value is working. If you look at our fourth quarter results, that 9% growth, it came almost entirely from traffic. That means guests picking Target more often, whether with their footsteps or clicks to our website. And
Yeah.
so those investments in protecting value are paying off.
Michael, I'm asking because you sort of are at this cross-section of what we talk about every day. We're talking about what's going on with Russia invading Ukraine, the possible disruption of supply chains, the possible ramifications on growth of oil prices. And I'm wondering how you factor these things in. Have you been scouring through your supply chains and looking for possible disruptions, either from this or other prospective conflicts? I mean, how does this factor in to your day-to-day decision making?
As you might expect, it's a situation we monitor really closely. And I'll start by just saying our hearts go out to everyone impacted by the situation in Ukraine. I know it weighs heavily on my mind, our target team, and our guests. We're fortunate we've got the benefit of a really sophisticated supply chain that's navigated a lot of challenges over the last 2 years incredibly well. Feel really good about our inventory position today, up 30% to last year. That's a testament to us working through some of those supply chain challenges, so we should be well positioned to start the year.
Have you found that you've actually gotten a lot of market share from smaller businesses simply because you have that ability to really rejigger supply chains and streamline certain costs so that you can pass it along?
When we look at our market share gains over the last couple of years, we see them coming from a variety of places. And some of that goes to, the market share story by category. As you know, we've got strength across so many categories, from a really strong apparel business to a strong food and beverage business. And each of those categories grew double digits in the last year. And so the market share story is a little different by category, but it's a wide set of sources.
Michael, big move in a pre-market today. Up by almost 11%. Monster move, in fact. From New York, thank you, Michael. Michael Fidalki there of Target. The Target move, quite sizable in early trading. Year to date, down about 13%. So we're raising much of that in the early part of today's session. A headline crossed just moments ago that might be of interest from Interfax. Russia demanding that YouTube and TikTok unblock RT, Tom, and Sputnik as well. Of course, those two broadcasters have been banned and removed from networks across Europe. Russia demanding YouTube and TikTok to unblock them in the last couple of minutes. That report coming from Interfax.
Well, John, coming this morning, I thought about this. When do we hear really from tech in a great way? We heard from Netflix last night, and I get the banning of RT and all that. But, Apple, Microsoft, here now Google, Meta, I still can't get used to that. I don't even know if they're really in the game. But the answer is, the big tech companies of America, John, can we agree they've pretty much been silent in this moment?
I think they're following what they've been instructed to do, and Lisa perhaps adding to that in some places as well.
Yeah, but it talks about how this is really an information war and how much this heats up. I mean, I've been tracking some of the cyber concerns around the world and how much that's been heating up. And that might be one of the takeaways from this entire conflict is how much this is an information battle, as we saw from President Biden, as well as cyber predominance and how much that plays out going forward as the new front lines.
This headline coming out of Europe just moments ago, Tom. RT and Sputnik and subsidiaries will no longer be able to spread their lies to justify Putin's war and to divide our union. The EU, pretty straight and upfront about all of this, and the UK expected to follow.
Well, where will they be tomorrow? Where will they be the next day? With the news off the northern shore of the Sea of Azov, this continues from Kharkiv bombing last night, and now to Mariupol and the Russian headlines there of closing the gap there. John, it's a story in motion.
The reality from von der Leyen, the EU chief, I'm well aware that these sanctions will come at a cost for our economy as well. A similar story coming out of the United States and President Biden. The State of the Union address a little bit later this evening. Futures down 0.8% from New York City. This is Bloomberg.
almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is really about stopping market panic.
It's particularly challenging for the central bankers to manage this conflict.
I think we're all trying to figure out what's going on now.
As you look at the ramifications on the markets, it is about energy.
The energy trade is going to be disrupted. This is not going to be a smooth thing.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio and television. We welcome all of you across this nation and worldwide to an extraordinary week. The news flow right now, just in the last 5 minutes, extraordinary. John, I want to go to the focal point, which is just 3 p.m. in Kyiv, and nighttime sets here at about 5:30. In 2.5 hours, nightfall will fall across Ukraine.
And that convoy, Tom, heading towards the Ukrainian capital gets your attention, mine, Lisa's, and everybody's around the world. They've stepped up that invasion in the last 24 hours. The attack has intensified, and according to Interfax, they use this word operation, Tom, the Russian word operation. That operation will continue.
And it is across all of eastern Ukraine. We're not going to go into those details right now. There's too much to talk about. But, John, the protest continues, including at the UN Human Rights Commission. They stand up and walk out on a remote, Lavrov.
And Ukraine asking for help now from China. The foreign minister just moments ago saying they've asked China to put the pressure on Russia to end the war. Speaking to the Chinese counterpart, Tom, early today, apparently.
Let's fold it into the markets, into our Bloomberg surveillance world. John, Italian inflation earlier, moments ago. German inflation, it's a top tick, 5.5% versus 5.4%. This is an inflation present and now an inflation from war.
So this is the story for me this morning, Tom. Yes, equities are lower, down by 0.8%. Yes, crude is higher, back through 100. But the move you're seeing at the front end, in Germany, in Italy as well for that matter, in the US, Treasury yields aggressively lower. We're fading out rate hikes from the ECB, pushing them into 2023 and trimming rate hike bets for 2022 at the Federal Reserve as well. Even with inflation prints like this one in Europe and maybe a similar one in the States with a 7 handle again on March 10th.
Lisa, let us assume they are rewriting the State of the Union tonight. Joe Michael will bring that to us, but they've got to be rewriting the State of the Union paragraph by paragraph given these events.
I mean, the phrase that we keep hearing is thread the needle. How do you thread the needle with inflation that's really facing a lot of consumers and is their top concern, as you see from a lot of the approval ratings, with the humanitarian and military crisis going on in Ukraine and with Russia bearing down? How does this end? How does the U.S. want to see this end, and how far are they willing to go in order to prevent Putin from fully taking over Kiev, given the fact that the sanctions already implemented are pretty severe?
John, the data, Euro Swissy in at a 102.45, that's stronger Swiss franc, and the real yield in the United States is stunning, John, with a plunge in the inflation view.
Bramo put that tweet out on Twitter of that chart, just plunging on the right side, aggressively lower. Who doesn't follow Bramo? So I'm not going to bother giving you the handle. Futures down 0.8% on the S&P. The Nasdaq 100 down by 0.9%. Everyone's already seen it already, Tom. Yields down by 7 basis points at 174.97. Tom, I'm just looking at the estimate for next week, and I only have 3 so far for CPI in America. Morgan Stanley has an 8 handle. 8%. Raymond James at 7.8. Only a couple of estimates. They'll move. We'll get more, but that's the story so far. Looking for a step up from the previous month.
I'm looking at the x-axis as well, John, to see how far out this new inflation lasts. Let us do this. Let us go to an informed guest. She is absolutely brilliant in mathematics. Her graduate studies are just bulletproof. She holds court at BNY Mellon Wealth Management. Alicia Levine on this historic Tuesday. Alicia, how has your view of the markets changed given war?
Look, the geopolitical situation over in Europe with a hot war really just adds another layer to an already kind of very difficult environment for equities here, because you have that specter of the late 1970s, early 1980s of that stagflationary fear of sort of ever ratcheting down growth and ever ratcheting up inflation, as you've just spoken about. And what this conflict does is it plays into the inflationary piece, because I don't think the oil and gas piece, the market's assuming that flows are going to stay the way they are, and then Iran will come on and it will be fine. And I think we have to ask ourselves, what if that doesn't happen? What if we do see a disruption? And I think you could see energy higher. And let's not forget that Ukraine is the breadbasket of the former Soviet Union. 25% of the world's wheat comes from Ukraine. And so therefore, commodity price inflation is going to stay higher. So it just really adds to those concerns and a difficult environment for equities as a result.
Alicia, are you surprised by how much we're fading Fed action this year, ECB action potentially later this year, and getting comfortable with the idea that the Fed will pull back a bit?
So I'm not surprised that the expectations for the ECB have pulled back, because after all, in a sense, the European economy is going to be most directly hit by this conflict and by the sanctions and by some turmoil in their local banks. So that's not entirely surprising. I think it is more surprising for the Fed, simply because the inflation here is broad-based and becoming sticky. And that is something the Fed is going to have to deal with first and foremost. And I think the worries about growth are going to be secondary. They have to deal with the inflation piece. And ever increasing oil here is not going to help. It's just lasting longer. And what we've seen is that the length of time, the duration that these kind of factors filter into expectations just make it worse. And so even if we think it's transitory for a year, it's already gotten into the psyche of consumers and business leaders.
Alicia, what happens if we continue to get this move where rates actually come down because people think that the Fed is not going to move, and yet we see stock markets continue to decline because people are starting to price in stagflation? What happens in a regime where people basically are saying the Fed has lost control over inflation?
Right. Look, that's the key question, because it's not a great environment for equities, but we actually think we're here in a range somewhere between that 4,100 to 4,500 range, which is where we've been bouncing around until we settle what the main issue is, whether can inflation start moving lower in the spring, and can the Fed do it in a way that doesn't inhibit growth. I'll say this, the data on the real economy is coming in pretty nicely in February, and so that really does support better than, pretty decent growth. I am happily surprised about that. But that's the range is where we are until it gets settled one way or another. So there's risks in both directions here. I think you're going to start to see a bid in some of those large cap tech stocks also, simply because that is really the safety play, earnings, cash flow, dependability of a business that's really divorced from the economic cycle. We're a little bit more cautious on the consumer cyclicals here, simply because in a rate hiking environment and an increasing inflation environment, those are really the areas to get hit first.
What are you doing with energy companies right now?
So we still like energy here. I think that much of the move is probably behind us. But given the situation here, I think energy is really still the play. And the really interesting question here, and you've been bringing this up all morning, a CEO from Devon Energy, why isn't the U.S. changing its energy policy in the way that Germany has? I mean, think of German policy changed radically of what it was for the last several decades as a response to this. And I think that's really something on a policy basis would not be a bad thing for the administration to address here, simply because it turns out that conflicts in places with very small percentages of global GDP really do affect us.
Alicia, wonderful to hear from you. As always, Alicia Levine there of BNY Mellon with some really important questions, including some thoughts on what Devon Energy had to say to Bloomberg in the past 24 hours. I'm a little mystified that there hasn't been some dialogue about boosting output, essentially saying, quote, if they were to reach out and maybe be a little bit more collaborative, it might provide some cover. That's the energy story. I want to talk about the banks too. In Europe, we're still down, and down aggressively so. Raiffeisen off by 11.5%. The bank, Tom, saying it has no plans to leave Russia right now. They do not have any plans to leave Russia. We're down by 11.6%. SocGen's down by 7.4%. Raiffeisen in 2 days has lost a quarter of its value. It's down 24% in just 2 trading sessions, Tom.
We're seeing open-end investment companies, mutual funds, ETFs and such stop trading, or I should say freeze up and say we can't trade right now. You wonder how that liquidity issue will pour over to commercial banks and frankly the central banks is, well, John, I think we need to understand here at 8:09 Wall Street time, we are on so many different fronts on Ukraine. I'm going to go down to the Black Sea, and I didn't know this. It's farther than I thought. The 400 miles from Romania and Odessa over to Russia in the Sea of Azov and Mariupol, it's a much greater distance. It's a 400-mile shoreline, John, that's under contest right now.
And things are stepping up and intensifying in the mainland in Ukraine. Lisa, just to go back to the bank story, you and I touched on this a little bit earlier. Has that become the primary way to express yourself in this market on what's about to happen in the Russian economy, given that the stock exchange in Moscow isn't even open?
Right, these are the liquidity nodes. So if you have one area you can trade, is that where everyone is trading, and you're seeing an outsized reaction in those shares? I would actually extrapolate that out. Is that a similar bet that we're seeing play out in the rates market? And are those tied? Basically, people are flooding into government bonds of developed nations because they don't know where else to go. And that prospect is also taking people away from banks that were counting on higher rates in the future.
With 30 basis points off the highs of Friday in just a couple of days on 10s on 2s.
Yeah.
174 on a 10-year. We were north of 2% on Friday. Your 2-year 131. The highs of Friday north of 160. 131 down 12 basis points on 2s. In the crude market, triple digits on WTI, 160-ish, up more than 5%, $100.65, up more than 5% in today's session. From New York, the coverage continues. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Rishika Gupta. Russia is vowing to press on with its attack in Ukraine until its goals are met. A large convoy of troops is slowly moving towards Ukraine's capital. Meanwhile, the mayor of the city of Kharkiv says residential areas are being bombed. A United Nations agency is reporting more than 100 civilian deaths and says there could be more. The European Union is discussing more sanctions against Russia today. It now seeks to block 7 Russian banks from SWIFT, the system that facilitates international payments between institutions. That's according to a draft list of the proposal. One of the banks is VTB, which is one of Russia's largest. The UK has also imposed sanctions on VTB. The White House had to shift gears for President Biden's first State of the Union address tonight. Originally, the president was going to highlight the improving coronavirus outlook and rebrand his domestic policy priorities as a way to lower costs for families. Now the speech also will highlight the Russian invasion of Ukraine and nuclear saber-rattling by Vladimir Putin. And the price of oil kept rising today. Futures in London rose by more than $5 a barrel, and the price of benchmark West Texas Intermediate went over $100 to the highest level going back to 2014. Bloomberg's learned that the U.S. and other major consuming nations may release 60 million barrels from the strategic reserves. That's equivalent to less than 6 days of Russian output. And shares of Target are soaring today. The discount retailer reported a jump in fourth quarter earnings. Target says its results will continue to improve on top of the pandemic-related boom that has already led to strong gains. Wall Street had expected operating profit in the current fiscal year to decline. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
Happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The Omicron variant and the latest wave have an impact on not only consumer trends, but your business. And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal
honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Wherever you get your news.
This is Bloomberg Daybreak with links.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg. Tonight,
we are ready to respond decisively.
Bloomberg brings you live coverage of the State of the Union address.
America is back to work.
Hosted by Joe Matthew.
Inflation is kind of the #1 talking point so far.
Reaction, analysis, and what it means for Wall Street.
He did leave this door open. Those are the words Democrats wanted to hear.
Biden may get a little bit of a lift on this.
The State of the Union address, followed by the Republican response. Coverage begins tonight at 8:30 Eastern.
From New York City, 1 hour and 12 minutes away from the opening bow, with futures just a little softer, -0.6% on the S&P. On the Nasdaq, down by 0.6% also. Into the bond market, this is where you're seeing some really big moves. On 10s, down another 9 basis points. On 2s, down by 12 to 131. In the FX market, some dollar strength out there too. Euro dollar 111.54, -0.6%. Some euro weakness. Speaking of Europe, I keep going back to the bank story. It's ugly out there for the banks in Europe. Just looking at some of the movers on the Stock 600 Banks Index. Raiffeisen down another 11%. SocGen down another 7.6%. Deutsche Bank off by 5.8%. Those losses, Tom, through this week, building.
They're building. The movement here right now is important. There's some real up and down to the market, but I'm going to say wait to the tape over the last 2 hours. What we're going to do here, General Kimmett will join us here in a moment, but right now on the State of the Union, Terry Haynes joins us with Pangea Policy tonight. Greg Villiers publishing this morning, Terry, says Biden suddenly a wartime president. How does a wartime president speak tonight?
Good morning, Tom. I don't think he speaks a whole lot differently than he has. And, you know, they won't fully think of themselves as a wartime president. There's a few things going on here. They're going to want to continue to highlight their domestic policy agenda. He's going to want to continue to highlight the nomination of Judge Brown Jackson to the Supreme Court. And he's also, on top of it, going to want to talk about the Ukraine matter in a general way, what they're interested in doing. But, well, in a general way, they're going to want to talk about what is going on in Ukraine. But they're not going to want to have the Ukraine situation hijacked every day.
On a general matter, what does he say about $5 a gallon gasoline?
I think generally speaking, what he does is twofold. One is he continues to use this line, I think, which frankly doesn't wash with the public, that this is up to the Fed. Secondly, he will talk about a variety of things that they might intend to do, from suspending the gas tax, and opening up the SPR and things like that. That will only have a marginal impact. I mean, it won't fundamentally deal with things. You're also going to see, by the way, over the next 2 days after the speech, Chair Powell being hammered by Congress to talk about how the Ukraine situation and the Russian situation might affect the Fed policy decision. You're not going to learn anything specific on that, but the body language will be really, really interesting, and more so than most of these usual congressional appearances.
Terry, I want to sit on one thing that you said about oil prices and the price at the pump and how there isn't that much that they can do that they have laid out, including the SPR release. Why has there not been more of a discussion about supporting or even encouraging domestic energy companies to drill more?
Because that is not where the base of the Democratic Party is, firstly. Secondly, the Biden administration has demonstrated over the past year a desire to want to hew closely to where their progressives are, rather than as Tom Keene might put it, instead of skating to where the puck is going, they continue to want to have everybody understand that they have particular views on where energy should go, which is not those talking points are not what you suggest, regardless of the new situation, so that's gonna help inflation stay with us.
There's a short-term idea of trying to stave off some of the increases amid this longer-term goal of creating a greener energy system and grid. How much do you start to see a splintering of the Democratic Party, frankly, in response to this, to say, actually, right now it would not be really contradictory to do some sort of encouraging of an increase in production domestically in the short term, even if long-term our goals haven't changed?
I think it's, the Democratic Party is already splintered on this. It's going to continue to splinter on this, frankly. You already see centrists, of course, led by Senator Manchin, pushing exactly that sort of line. And meanwhile, you have on the other hand, somebody like John Kerry who thinks that climate change continues to be the worst problem, is exacerbated by war, and that's really where the progressives are. So that doesn't resolve anytime soon, and if it doesn't resolve, I don't see how you can expect Washington to change over quickly.
Terry, who does the president focus on tonight? The progressives, the liberals, or the centrist Democrats?
By every indication, they'll continue to double down on the progressives, and that's where they've been for the last year. Even the decision to nominate Judge Brown Jackson over the more, who I think will get confirmed and is highly qualified, but over Judge Childs, who was preferred by Biden's primary savior, Congressman Clyburn, and Republican Senator Lindsey Graham of South Carolina, shows continued fealty to the progressive line. I don't see that changing, frankly. And again, they could skate to the puck and kind of flip the script and on this, but I don't see them doing it tonight. There's no indication that they will.
Hey, Terry, thank you. Terry Haynes, looking forward to this evening and the reaction and response to it. Reaction and response through the morning from Russia and Europe. Britain, the mayor of France, had some strong things to say this morning. A punchy response from Dmitry Medvedev, Tom, out on Twitter.
Yes.
Now the deputy chair of the Security Council of the Russian Federation. Here's the quote. Today, some French minister has said they declared an economic war on Russia. Watch your tongue. And don't forget that in human history, economic wars quite often turned into real ones. The rhetoric, Tom, the dialogue has really moved in the wrong direction in the last couple of days.
And of course, we really haven't heard from Mr. Putin, and that's an important item to hear from right now. John, I want to point out Swiss franc breaks down to new Swiss strength. To me, that's a huge deal. It's a little tea leaf of the moment, but there it is, new Swiss strength.
And alongside that, this bid into the bond market, we keep talking about the rally in treasuries, the rally in bonds. Lisa, 10's down by 8 basis points, your 2-year down by 12.
And the dollar really rallying. How much does the Fed respond? How much does the ECB respond by ratcheting back their expectations for rate hikes? And how much are people just using bonds, government bonds of the developed world, as a proxy for a haven that will end up being a trap later on as people look at inflation?
The Fed speak through the next couple of days. Bostic, Mester, Evans, Bullard, Chairman Powell tomorrow. Could get pretty interesting, Lisa. Payrolls Friday, inflation data next week.
Are you watching the body language of Jerome Powell? I mean, I wonder how much people are going to be parsing out his words, his body language, the way he talks about Ukraine to figure out what policy will be.
I'll borrow what Alicia Levine of BNY Mellon said. The read across for the ECB might be obvious. For the Fed, much less so.
I would agree.
But this bond market's making the same bet this morning, taking out rate hikes for 2022. Yields down 8 basis points, 174 on 10s. The equity market down 0.6%, and crude triple digits on WTI.
nuestro estudio, en nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Let's whip through this price action for you on TV and radio. Equities down 0.4%, erasing some of this morning's losses. On the Nasdaq, down by the same amount. In the bond market, we give up some of that bid in treasuries. Yields now lower by 5 basis points. We were threatening to break through 170 earlier, now approaching 180 again at 177.36. So a bit of a turnaround in this market on equities and bonds in the last 15 minutes. Two-year yields down by 9 basis points. They were lower by more than 10, 11, 12 basis points at one point. 135 on twos at the moment. And we just back away from triple digits on WTI, Tom, 99.92 on crude at the moment, up more than 4%.
Markets on the move right now. What we will do is speak of this war. We do this with a gentleman early in his career at that time when Russia again blew up in the early 90s. Mark Kimmett was with the 8th Infantry and then on through other tours of duty with the Army. And General Kimmett, Division Artillery Commander, the 1st Armored Division in Germany. He has hands-on experience, as Ben Hodges did the other day for us as well. General Kimmett, thank you for joining us this morning. Mark Kimmett, what will the tank warfare look like in Kharkiv? What will the warfare look like in Kyiv?
Well, first of all, Tom, it won't be tank warfare. All those advantages that the Russians have with those mechanized vehicles, to a great extent, is completely neutralized when you go inside the city. These are small streets. Even the large ones can't fit a lot of tanks through them. And it goes down to a completely different kind of warfare that we're seeing right now on the roads.
If we're seeing a different warfare, do you suggest we'll see it in any moment's notice? And with that, we will see Ukraine do better than the last 24 hours?
Well, we'll see. Clearly, the Ukrainians have done very, very well up to this point, but it's the first inning in a 9-inning ball game. When you go into the cities, everything that they have been doing up to this point changes. They certainly have the advantages as the defender in the cities, and a lot of the advantages that the Russians had are just completely neutralized. But it is still tough, brutal combat in a way that we haven't seen yet. Urban combat is, for any military historian, certainly understood, it's the toughest grittiest, bloodiest kind of warfare there is.
We've heard it a million times, General, that it has to favour the attacker, the ratio in combat, in urban warfare. Can you run me through the kind of ratio you're thinking about, General? Because we hear things like 6-to-1, what an attacker needs to overwhelm the defender in urban warfare. What kind of ratio is needed?
Oh, it could be far more than that. You took a look at what happened in Mosul. 100,000 troops were necessary to go against ISIS in Mosul, about 6,000 inside there. Unfortunately, there's a huge toll on the civilian population inside those cities as well. But for an attacker to win in a city fight, as our Marines did in Fallujah, it takes extraordinary numbers, and it also takes extraordinary valor.
And that last point is the important point, General. And can we sit on that for a moment? How unique is this when we see these videos of the individuals coming from the Russian army into Ukraine with seemingly very little appetite to attack, and the Ukrainian people just pushing those tanks back? General, what have you made of that as you've seen those videos through social media, through reporting on news networks around the world?
Yeah, I have seen the ones that are shown on social media where the Russians aren't coming across too well. What we're not seeing is those early insertions done by the Russian paratroopers into some of those airfields. Those are professional paratroopers. They are not conscripts, and they're much better trained. But when you're talking about the conscripts that we're seeing on the road that are basically giving up or dying, I think that the Ukrainians have acquitted themselves spectacularly up to this point.
General, do you think that we are underestimating the morale issue, both the boosted morale on the Ukrainian side and the opposite on the Russian side?
No, I think we've got it about right. I think that everybody is surprised at how poorly the Russians have done up to this point. Much can be explained, number one, by the fact that these are conscripts that never knew they were going to be thrown into a war. And number two, the intense leadership shown by President Zelensky, which has toughened the backbone of every one of those civilians and the military and the militias that they're fighting them.
General, can you see an end game at this point, given the fact that it seems like Vladimir Putin is not giving in any way, and the Western allies are simply trying to remain with the sanctions and clamping down harder on that front?
Yeah, Lisa, that's a good question, because as I said earlier, this is the first inning in a 9-inning ball game. And the Russians will just continue to hammer and hammer and hammer away at you in places such as cities. They don't worry about casualties. They don't worry about collateral damage. They don't worry about infrastructure. So I would expect that his end game will be to go into those cities and destroy them. It's that simple. Destroy the buildings, destroy the people, destroy the civilians. They don't care. They will continue to flow troops and equipment in there and fire artillery, missiles, and bomb them until they are destroyed. That's how they see the end game. And in many ways, people would say that's the only end game that you can accomplish inside this type of warfare.
General, I want you to speak to the public that has not worn the uniform that you have worn. There's a massive primal scream, just do something. And I want to talk about the American initiative, or even initiatives plural, here, to fly into Western Ukraine and deposit a massive force that the Ukrainians can use, or to come in through the Black Sea, Alastravitas and the others. What's the initiative America can do now to assist militarily President Zelensky?
Well, I think the main thing is to do what we've been doing, not only as Americans, but as our NATO colleagues and our NATO allies, which is flow as much precision weapons into Ukraine as possible, whether it's Stinger missiles to bring down their helicopters, javelins to knock out their tanks and their artillery, drones to conduct drone warfare against selected targets.
Right.
But we want to contain this inside Ukraine. We can't be putting Americans into Ukraine. Otherwise, this will spill over into NATO, and it'll be a much, much bigger war.
What would you do as a mandate as a general in combat, which you've done? What would you do with a convoy 40 miles long? Is that the job of modern technology and drones?
Well, the problem with that, of course, Tom, is that we don't have air superiority. You remember in the first Gulf War.
So do we need a no-fly zone? The comment of the moment, General, is we need a no-fly zone.
Well, the no-fly zone won't help the Ukrainian Air Force get into the air. It's virtually non-existent at this point. And again, the no-fly zone would completely change the dimension of this conflict from a war inside of Ukraine to a war that could spill over in Europe. What we need to do more than anything else is see if we can get those Ukrainian helicopters in the air, because as we say in the military, 40 miles of vehicles is a target-rich environment. We've seen them destroyed as we did in the first Gulf War, where we destroyed about 10 miles of vehicles, and it would be pretty easy. But the Russians have air superiority, and we've got to take that air superiority away from them through anti-aircraft devices such as Stingers. But I don't think that will happen in time.
General, as things stand, to wrap things up, we'd love your assessment of the base case about how this turns out. Eurasia Group was on with us earlier this week. They said we continue to see the most likely outcome of the invasion as a combination of regime change and Russian political control over the entirety of the country. What's your conclusion, your base case at the moment, General?
Well, I think that's probably where it will end up if these peace negotiations, if these peace talks on the Belarusian border don't accomplish anything. Remember, wars don't end when the last person dies. Wars end at the diplomacy table, at the negotiating table. And candidly, the sooner we can negotiate Russia out of Ukraine, the better.
Mark, General, I'm wondering, a lot of people are talking about the fact that Russia is a nuclear power. And NATO came out this morning and said that there is no need to change the nuclear weapons alert, even though Russia has come out and taken steps on that front. How concerned should we be? Can we shrug this off?
Well, I don't think we can just shrug it off. But I would tell you that while Vladimir Putin may be stupid, he's not suicidal. And I think even he recognizes that a nuclear exchange of any kind would be not only the end of his regime, but in many ways could completely sink the Russian Federation.
General, we have to leave it there. We appreciate your time. And, sir, please stay close. We'd love to catch up with you again soon. Lucky to catch up with General Mark Kimmett this morning. Some headlines from CCTV. China calling on Ukraine, Russia to find a solution through talks, CCTV citing a call between Chinese and Ukrainian foreign ministers. Of course, Tom, we had some commentary on that earlier this hour.
Well, the commentary on it, it's very, very fluid. But to the General's point, and you've got India, China, there's a hungry headline out moments ago. I might even think it's worth talking about. But, John, what I would say is the military operation here now going into 4 p.m., I'm going to guess, in Kyiv, is really front and center. The military's really come in the last hour. It's the story of the moment.
Had a headline from Deutsche Börse just a moment ago, too, to suspend all Russian securities from trading effective Wednesday. So that's an example of isolating Russia through finance. Lisa, isolating Russia through commerce, BP leaving, through media, RT being taken down in Europe, through sport, FIFA, UEFA, Formula One, that country increasingly being isolated.
How long does it take before it becomes politically toxic to do business or rely on certain revenue streams from Russia at a time even before sanctions or legal prohibitions come into place?
What did Jamie Dimon call himself yesterday? A patriot. Said he was a patriot. You tell us what to do, we'll follow the rules. We'll follow the sanctions. We'll abide by the sanctions. I'm a patriot. The real question, Lisa, do you have a moral obligation to step back from doing business with Russia, even if the sanctions don't require you to? That's what you've got to ask these leaders of these companies at the moment.
And we've seen different approaches, certainly with big oil, but I'm guessing you're going to hear this more with other companies as well.
Futures down 1/3% on the S&P, down 0.4 on the NASDAQ. We recover going into the opening bell 50 minutes away. Yields down 6 basis points, 176, and crude $100 a barrel.
Keeping you up to date with news from around the world with the first word, I'm Rishika Gupta. The mayor of Ukraine's second largest city, Kharkiv, calls it a war to destroy the Ukrainian people. Russia stepped up its shelling of key cities in Ukraine overnight. The Kharkiv mayor says that residential areas are being hit, even though Moscow says it's only going after military targets. Meanwhile, a large convoy of Russian troops is slowly closing in the capital, Kyiv. Democratic Senator Joe Manchin wants the Biden administration to encourage more domestic energy production. Manchin says it's ridiculous that the U.S. buys oil from Russia, and he's planning weeks of hearings on energy independence. Facebook, Instagram, and TikTok are trying to curtail propaganda during Russia's invasion of Ukraine. They are restricting state-owned Russian media channels ahead of a likely European Union ban. The channels are run by Sputnik and Russia Today. And that ship that caught fire whilst carrying 4,000 Volkswagen vehicles to the U.S. has now sunk. The operator of the Felicity Ace says it sank off the coast of Portugal's Azore Islands today. The ship carried a number of luxury cars, including Porsches, Lamborghinis, and Bentleys. An international boycott of Russian vodka is building from the U.S. to Australia. At least 3 U.S. governors ordered the removal of Russian-made or branded spirits from stores. The steps may be largely symbolic. Vodka from Russia accounts for a little more than 1% of the total value of imports of the spirit into the U.S. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I'm here at the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. That Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. there are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
I'm all in favour of finding a solution, but how can you negotiate with somebody whose tanks are rolling towards Kiev and who is bombing innocent civilians? I think it's impossible at the moment, and I think that is the reality.
On the road, the Prime Minister of the United Kingdom, Boris Johnson, in Poland, I believe in Estonia, in short order, as he visits two countries on the Russian far abroad. We welcome all of you to Bloomberg Surveillance this morning, Lisa Bramwitz and Tom Keene. Right now, we're going to look at the softs. Kriti Gupta with a chart that's quite important on food. Kriti?
Yeah, well, we've been talking about the read-through from, of course, the Russian invasion on Ukraine. We've been talking about oil. We've been talking about aluminum. We should be talking about grains. Together, Ukraine and Russia making up over a quarter of the world's grain supply. So that brings me to my chart of the day here, which shows the Bloomberg Grain Spot Index nearing an all-time record. For our TV audience, there's blue circles to show previous peaks. For our radio audience, what you need to know is going back to the 90s, every peak has been weather-driven or driven by a crop crisis, a harvest crisis. This time, the supply exists, but because of the transport costs coming out of the war zone, the market is essentially treating it like there's no supply at all, and that's going to have a real read-through into things like cereal, bread, beer even. Think about the company read-through, Kellogg, General Mills, Anheuser-Busch. So this is definitely a chart you want to keep your eye on.
Kriti, thank you so much. Greatly appreciate that this morning. It was Bailout Nation, which is the culmination of Barry Ritholtz with just fabulous collation of history and research into a book on the financial crisis. Leave it to Mr. Ritholtz of Bloomberg Opinion and, of course, his wonderful podcast to do the collation of the sum of all our fears. I love the sourcing, Barry, LPL Research, S&P, Dow Jones, CFRA, Bloomberg, and the rest of it, and you line up the sum of our fears going back to December of 1941. Pearl Harbor, Tet Offensive, Madrid bombing, Saudi Aramco drone strike, and on and on. What do markets do given these fears?
Yeah, that's a chart that would make Danny Kahneman smile, because the immediate response, the fast response, is an emotional spasm, an overreaction, typically in opposite direction of what the prior trend was. But then cooler heads prevail. People look at, well, what's the actual economic and corporate impact of these assassinations, wars, terror attacks? And it turns out, for the most part, it's a modest impact. And so markets quickly, after an initial stumble, they stabilize and just resume their prior trends.
If I'm in a fund, ETF, whatever, it has Russia, it's frozen right now, like the Schroders fund 3 hours ago. I just wait for it to become unfrozen? Is that, I guess that's the perspective.
It depends if it's an index or an active fund. I was heartened by the news from MSCI yesterday that they're considering tossing Russia out of their emerging market index. What may end up happening is Russia gets downgraded to frontier nation status, which is, just tiny compared to the trillions of dollars that are in emerging market issuances. But, when you look around the world, what is Russia's stock market relative to the rest of the globe? 1%, 1.5%. It's not all that big a deal. And eventually you'll have an opportunity to either liquidate or rotate into an ex-Russia fund.
But on a broader level, it's not just Russian assets, Barry. It's also the ramifications for oil, for wheat. Wheat prices are absolutely surging today, as we saw from Kriti there. I am wondering at what point, as an investor, you take stock of these changes, these input costs, and you say, this feels different. It's the Fed, yes, but they have lost control over some of these inputs that have nothing to do with Fed policy and have to do with very tangible, real supply chains and human labor.
Right. The Fed doesn't have control over chip manufacturing, and they don't have control over Vladimir Putin's war objectives. So this is not the sort of thing that can be half a point increase, which there was a ton of chatter the past couple of weeks. That's done. You're not going to see anybody talking about that for a while. But the bigger question is, what does this mean to GDP? What does this mean to inflation? I know transitory has become a dirty word. Unless you think this war is going to last a year or two, then this is more likely to be over in a couple of months or quarters, and things should start to go back to normal. But that's typically what happens, and we'll see alternative sources of energy. I like the Bloomberg headline earlier today. The cure for Russians' power is green energy. That's really how you hurt Russian global ambitions, is you take away their source of financing.
In the short term, however, things are going to be potentially a lot bumpier because that is a long-term type of solution or type of progression. I'm wondering, from your perspective, what has to happen for you to change your view that this will end like a lot of other geopolitical risk upsurges, that basically it will peter out and it will be short-lived?
So, you know, on that list that Tom mentioned earlier, going back to the U.S. entry into World War II, arguably the worst war in human history. From Pearl Harbor, it took us about 154 days for the market to bottom, and then another 300 or so days for the market to regain its pre-Pearl Harbor highs. So not to downplay the human tragedy and what a horrible circumstance is taking place in the Ukraine, but when we look at World War II, a year and a half later, the market shook it off. And that's World War II. Our working assumption is, unless there are some really terrible miscalculations, this shouldn't spill over into Europe. This shouldn't drag the U.S. in. This should be a somewhat limited war. We could do what we can to cut Russia off from the global finance system, but there's no appetite for boots on the ground here or in Europe.
We have to leave it there. Barry, thank you so much this morning. Lisa, headlines from China.
Yeah, we're getting from CCTV in China. This is Wang Yi. He is the senior Chinese diplomat and politician, speaking and talking about the issue in Ukraine, with Ukrainian President Zelensky coming out and asking that China pressure Russia to stop the invasion, basically saying that it is in priority to prevent harm to civilians as this war expands, saying that China is extremely concerned about harm to civilians and that China upholds respect for the sovereignty of all nations. Some actually significant words from a nation that's been relatively quiet on this. Of course, China and Russia have been somewhat allies of convenience as a response to their just trade relationship and geographic relationship. But how long does that actually last at a time when people are looking for maximum pressure?
In the last 40 minutes, an improvement in the tape from negative 200 on the Dow, now negative 60. SPX almost goes green. Small caps as the Russell is a positive 4. That's a little bit of green on the screen. And the VIX decisively coming in from a high 32 level into 30.64. So a better tape. You see that expressed in yield as well. The 10-year yield 1.79%, much better than where it was. Oil, Brent crude 105 down to 103.22. And gold even pulling back, excuse me, 1920 to 1918. Even Euro Swissy weaker Swiss. So a better tape as we enter that final half hour before we open for trading. At 12 noon today, with a State of the Union. Later tonight, William Cohen. This is Bloomberg. Good morning.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
From New York City,
in London, in Sydney, in San Francisco,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
To recap the headlines.
You do not want to miss this
How
story.
are you thinking about those dynamics?
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This equity market recovering a little bit this morning. Good morning to you all. We are negative, but by just 0.2%. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York City, we begin with the big issue. Russia pushing on, companies pulling back. A massive Russian military convoy edging closer to the capital amid heavy fighting throughout the country. Interfax reporting that Russian forces will continue their, quote, military operation until they meet their goals. President Putin pushing forward despite corporations backing out in energy. Shell following BP's departure, citing Russia's, quote, senseless act of military aggression. Shipping giant Maersk suspending its Russian bookings, saying the stability and safety of its operations were, quote, directly being impacted by sanctions and indirectly impacted as well. And the banking world following suit too. Lenders SocGen, Credit Suisse said to no longer be providing money to finance commodities trading there, some restricting lending more broadly. Team coverage starts right now with Bloomberg's Maria Tadeo in Warsaw and Anne-Marie down in DC. Maria, what's the latest?
Well, Jonathan, the Russians say this operation will continue. By that, of course, we mean the attack now on all fronts on Ukraine. They say will continue until they meet all of their targets. Of course, we know that in reality, that means that the government in Ukraine, led by President Zelensky, would have to go. The country would have to give up its weapons, become neutral, and of course, ditch that pledge to join NATO and the European Union. The reality on the ground in Ukraine becoming ever more concerning. We're seeing that this is now a full escalation on the military and combat front. We've seen yesterday footage, horrific footage of fighting that now targets essentially everything. This is not just about military points. And I had a European official telling me the nature of the war changed last night with that bombing that hit residential offices. Meanwhile, at the same time, we have the Ukrainian president today addressing Europeans, saying you need to do more, you need to step up, whether it's weapons or sanctions. Russia's now behaving like a terror state, having said that, when you speak to Ukrainian officials, they say this is day 6, but they will continue to fight, and the will to resist is there. So again, the concern, of course, is that we're going to see a big escalation as Russia becomes ever more impatient about what is now a much longer war than they anticipated, Jonathan.
Companies around the world adjusting to a lot of this. Just getting a headline from VTB. VTB Commodities Trading Unit is winding down metal positions. Anne-Marie, the talk's ongoing. There are hopes for more talks. The base case of how that turns out, I have no idea. What we do know from this morning is that China and Ukraine, Anne-Marie, spoke. What was the outcome of those talks?
Well, China has been pushing for Ukraine and Russia to have discussions about this, to end this invasion, although China is very careful in how, of course, they word all of this. China, of course, has been walking this very fine line. We saw them at the UN. They didn't go for a veto, but they did abstain alongside India, the United Arab Emirates, we should note as well, considering that President Putin this morning spoke to Mohammed bin Zayed of the UAE. But right now, Jonathan, China is evacuating their citizens, and what they want to make sure is that civilians are protected. That was the outcome from the foreign minister speaking. They want to make sure that civilians are protected, and the reports that we're seeing with the mayor of Kharkiv saying that Russia is now bombing and attacking civilian areas. This is not just military operations.
Hearing that Secretary Yellen spoke with the French finance minister about Russia as well. Looking at the commodity moves we're seeing at the moment, you can imagine why the administration is so focused on what could happen here at home domestically off the back of this AMH. Brent at 103, WTI at 100. We caught up with Devon Energy recently here at Bloomberg. The quote from the CEO read as follows: "I'm a little mystified that there hasn't been some dialogue between them and the administration." The CEO went on to say if they were to reach out and maybe had a little bit more of a collaborative approach, it might provide some cover from investors who might be annoyed with them for doing more, for pumping more, investing more. Anne-Marie, can you believe that there hasn't been that outreach from this administration to the oil patch to boost production here at home in America?
Yeah, this is going to be one of the issues the president's going to have to address this evening, right, Jonathan, when he gives his remarks to State of the Union, because the foreign policy issue he's dealing with right now, and he's becoming a wartime president, means higher oil prices. And back home in the United States, to everyday consumers, that trickles down to higher gasoline prices. And Russia is a commodity superstore, so actually it means higher prices in general. We could see higher wheat prices, aluminum, palladium, et cetera, and all these things feed into the supply chain, and that can mean higher costs for everyday consumers. Jonathan, I do know that there have been some company outreach within the administration. I wrote a story about how Exxon was going to have to be one of those companies that had to shift banks to make sure they continue to pay their workers, because one of the banks the U.S. administration was going to sanction was one that Exxon used. I know you just read that headline off about VTB. We should also note that Europe today, our reporting shows a draft list of what those de-swifting banks can be. VTB is one of them, and they are one of those banks that is highly integrated in the energy trades.
AMH, the spillover, I don't know if we quite fully understand, have got our hands around how big this might be. AMH over in DC, Maria Tadeo in Poland today. Maria, thank you. Let's just reset for a moment. 25 out from the opening bell, 25 minutes to be precise. Futures still down 1/3 but we were down more than 1%. There was this monster bid into the bond market, Treasuries rallying and rallying hard. On the 10-year, we give a lot of that up. On the 30-year, almost completely. The 10-year down 4 basis points to about 179. We were threatening to break through 170 at 1.2s at 136, down by 7 basis points. We broke through 130 at one point, so we bounced back there. But just think about where we were on Friday. The higher the session on Friday on 10s, north of 2%. On 2s, north of 160. We've come in 25, 30 basis points on those two maturities. And this quote from BlackRock, I think, sets the stage for a broader conversation about what's happening here. BlackRock said this: the Russian invasion of Ukraine is a human tragedy. They went on to say, we now know what we are dealing with, a protracted standoff between Russia and the West. We also think it has reduced the risk of central banks slamming the brakes. It's that last line that we need to discuss. Does it really reduce the risk of central banks slamming the brakes? With us now, Crossmark's Victoria Fernandez, Tallbackers Michael Purvis, James Athey of Aberdeen Asset Management. Victoria, let's start there. That's the hope. I think that brings some balls here in America, some comfort for the Federal Reserve and the path forward. Do these events change things for them?
So, Jonathan, you know my thoughts on the March meeting, and I've always said I didn't think the Fed was going to go 50 basis points, that they were going to do 25 because they didn't want to jump out of the gate and go full force. They wanted to take slow steps because at the time it was a concern that maybe inflation was going to peak in the first quarter, and they didn't want to get over their skis. They wanted to be able to have some optionality. Now that optionality is coming more from geopolitical tensions that feed through to inflation. Obviously, if this continues on for a while, we're going to see gas prices continue to be higher. We're going to see commodities remain higher from this jump that we've seen over the last 48 hours or so. And so that feeds into that inflation story. But this is what gives them a little bit of cover, a little bit of flight to quality we've seen in the bond market. And I think that keeps them at 25 basis points in 2 weeks.
James Athey, it might take some pressure off them for the March meeting, for this meeting on March 16th, to do 50, and maybe they end up doing 25. When I look at the estimates for March 10th, everybody says, James, that one data point can't change a story. Let's talk about how we might feel on March 10th if we got an 8 handle on CPI, James. I wonder how quickly we'd readjust our calculation on the path ahead after that.
Yeah, I mean, we shouldn't, John, right? I mean, as you say, we shouldn't be shifting our forecast based on one print, but it does look particularly scary. I mean, I agree with Victoria in the sense I didn't think they were going to go 50 anyway. If you add up the individual Fed speakers, there didn't seem to be a majority in favor of 50 to sort of open proceedings in March. But in my opinion, this doesn't reduce the pressure on them to act. This increases the pressure on them to act. Essentially, what we're seeing is a stagflationary shock, which is pushing on the forces which already existed. They have been put in a position where they're miles behind the curve, partly by their own actions and partly by things which are going on well outside their control. But realistically, they were hiking to deal with high inflation and high inflation expectations in spite of falling growth momentum and falling real wages, not because of. So the usual means by which they would add up the various variables to get a policy outlook was somewhat giving conflicting signals anyway. And I think what we're seeing in Russia and Ukraine pushes commodity prices up, as we've already heard, and it's going to squeeze real incomes further. So it just exacerbates the forces which already existed. Having 0 rates and buying bonds when inflation is 7 is heinous. Doing the same when it's 8 is only marginally more heinous.
We're expecting a step up in a CPI print, Michael Purvis, on March 10th, ahead of that March 16th meeting. I'd love your thoughts on this topic because a consensus has formed pretty quickly that this takes some heat off the Fed. James Athey's point is that it leaves the heat on, maybe even turns it up.
Look, I think putting the Fed aside for the moment, one of the things that the markets has been repricing is not just March, but the terminal hiking trajectory right now. So we've already seen, 3 years out, the terminal hike, the terminal rate rather, being cut down by 25 basis points there. I think that's in many ways for equities, probably much more significant than whether we get 50 or 25. And I would completely agree with both of my co-guests that we're on the, I was on the 25 path before the invasion, and all the more so now. I think the look, at the end of the day, this tragedy of Russia's invasion of the Ukraine, I think the Fed it's a huge brainer for the Fed, because I think you can very much agree with James's point that there's one of the clear outcomes is higher oil prices and higher food prices there. And the countervailing point is that there's sort of this geopolitical mess, and we need to, the Fed's going to feel obligated to support the economies and not necessarily disrupt emerging market currencies and emerging market fundamentals by being too hawkish here. So my guess is that the Fed's narrative coming out of all this thing is going to be a little bit probably nuanced and a little bit vague in a way, but I don't think they're going to be, when push comes to shove, they will be marginally more dovish than hawkish here, even if oil stays above $100.
And we'll keep building on that. Michael Purvis, James Athey, Victoria Fernandez. Crude above $100 on WTI, Brent at 103.18. Just hearing from Barkinder, who says OPEC plus, the plus being Russia, that pact to continue regardless of the challenges. Also seeing a headline on the Bloomberg right now. The UAE and Russia agree on the need to preserve stability of the oil market. That's something I'm not sure anyone can guarantee at the moment. Let's get you some stock moves ahead of the opening bell, about 20 minutes away. Here's Abby.
John, well, related to the oil market, let's start out with the energy complex because it is, of course, popping. We have WTI crude up 5%, really soaring above $100 per barrel at its highest level since July of 2014. On this, we have Chevron higher. We also have aluminum higher, this on output risks related to refineries and smelters in Ukraine and Russia. This is sending Rio Tinto higher. On the other hand, Bank of America down about 1%. Other banks lower too as yields come in, that bid for bonds. And then gold is higher, but blockchain, or excuse me, Bitcoin really sharply higher, up 6%. That's sending Riot Blockchain up 6.7%. So those are some movers related to the Russian invasion of Ukraine. As for retail and the state of the U.S. consumer, unrelated to that war, Target up 14%, headed to its best day since November of 2014. Kohl's and Chico's also higher. This very wide variety of retailers all put up great quarters. And Target, very importantly, John, they're saying that the pandemic boom, that those trends are really lasting, investors liking it. Again, Target up 14%, the best day since November of 2014, if those gains hold.
Abby, thank you. Coming up on the program, the administration leaving energy sanctions on the table.
We have not taken some steps on energy sanctions, in part because we weigh that. It doesn't mean they're off the table.
That conversation up next.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Russia invades Ukraine.
Circumstances require firm and immediate action.
The sanctions we imposed exceed anything that's ever been done.
Turn to Bloomberg for up-to-the-minute reporting from around the world.
The Europeans change course to help Ukraine in this fight.
The most powerful forces in the world are watching from a distance.
And analysis of what it all means to you.
How quickly does this start to test the unity of the EU?
How closely aligned Russia and China really are.
Energy is on the table.
Keep it tuned to Bloomberg Television and Radio.
We're willing, if necessary, and I think it will be necessary, to go further. There is plainly more to be done on SWIFT. We can tighten up yet further on SWIFT. Even though it's had a dramatic effect already, I think we do need to go further. There's more to be done on Sberbank, more to be done on the freezing of Russian assets.
There's more to be done. The words of the British Prime Minister Boris Johnson in Poland today, speaking to his counterpart Will they focus on energy? Right now, crude up more than 5%, 101 on WTI, Brent 103.60, up by almost 6% on the day. On the year-to-date, Brent up more than 33%. President Putin speaking with the UAE ahead of OPEC's meeting later this week, saying discussions focusing on, quote, supporting stability in the global energy market, according to a Kremlin statement. Joining us now, one of the best worldwide, Javier Blas of Bloomberg Opinion. Javier, can they guarantee, quote, stability in the global energy market?
I think it's going to be very difficult that they can guarantee stability in the energy market unless they are willing to add a lot more production into energy market. And so far, all the indications are that OPEC just wants to increase production by 400,000 barrels a day, which is what it has been doing for the last few months. And it already got us into trouble before even the invasion of Ukraine started. So no, I don't think that OPEC is just going to provide much stability to the oil market unless Saudi Arabia and the UAE wants to break with Russia and really increase production significantly in a unilateral way.
Javier, you and I have been talking about self-sanctioning, self-imposed restrictions of oil majors. They haven't been told, they might have been asked, they might have been pressured, but they're acting. BP, Shell. Shell said this. They cited Russia's senseless act of military aggression. Shell are out, BP are out. Javier, Total, what on earth were they talking about this morning?
I was shocked because when I saw Bruno Le Maire, the finance minister of France, saying that the actions in Ukraine require all companies to act, I thought that it was a given that Total was going to announce that it was withdrawing from the country. However, put a statement that it was really surprising and announced that it will not invest, it will not make further investments, but it didn't say anything about leaving the country. So for Total is staying. There is a conversation later today between the French government and Total CEO. So I will expect that this may change over the coming hours. I was deeply shocked. I mean, Total is a company that is willing to go where other international big companies didn't want to go. Myanmar, Yemen, Cuba, Iran. But to stay now in Russia is really surprising.
Javier, these guys spend so much time talking about things like ESG. When it comes to sanctions, do you think that they see the writing on the wall? Do you think they see the direction of travel here and think we've got to act now? Or do you seriously think there is a moral obligation that has gripped the C-suite of some of these companies and they've just decided enough's enough?
I think it's a combination of that. I mean, I do think that they see the writing in the wall and they see the direction of traveling. But I also think that some CEOs and chairmen are deeply shocked by what they have seen. I mean, only a few days ago, everyone thought that Putin was not going to invade, and they were. People in the oil industry were sending that message, and everyone got this wrong, or most people, I got this wrong. I didn't thought that Putin was going to invade, and I think that there is a sentiment of shock within the oil industry that this happened. But I also think that the sanctions certainly are not there. The West is not going after oil and gas for now. But everyone that you talk in the oil industry, whether it's in the United States or here in Europe, think that the direction of travel is that.
They're behaving like the sanctions are there already. Javier, thank you, sir. Javier Blas of Bloomberg, fantastic as always. Victoria, I know you like the banks, you like energy too. Let's save the banks for later. Energy. Energy in Europe right now is a tough one. The US, is that more obvious?
Yeah, well, I mean, it's tough. Look, we obviously think that at some point sanctions in regards to energy are going to come into play, not just the self-imposed kind, but the mandated kind. And I think right now, I mean, the headlines are changing constantly, but Canada is the only country that has really imposed a ban on imports from Russian oil. So I think you're going to see other countries start to follow suit with that. Obviously, when we chose energy as one of our favorite sectors for the year, it was at the beginning of the year, and we saw a lot of upside potential there. Now there's going to be a lot of volatility here, but we do think it's going to continue to be a space that's going to do well. One, because of the pressure on pricing, upward pricing. I think Morgan Stanley is saying they're seeing Brent at what, $110 on average, possibly up to $125. And that actually helps Russia. So that's something people need to think about as well as they continue to collect that. But look, we're looking at companies like ConocoPhillips, at Marathon Petroleum. We like the companies that have to do with some of the transportation of energy. So I think that's where you have to focus. We wouldn't be focusing, obviously, on European at this time based on what we're hearing. But I still think long term, it's a sector we want to be in for this year.
You mentioned a call from one of the banks, Goldman, at 115, 1 month price target on Brent. Goldman's Dominic Wilson said this: the market may be underestimating the risks of tighter supply on pricing. I'm going to come to you on this one, James. Are we underestimating the broader story? More importantly, because we haven't got a proper market on dollar ruble. Things are changed. Things are shut and closed in Moscow, so we can't actually exit some of these trades there too. James, I just wonder, when it comes to crude, whether it's too early to draw any conclusions about what could happen here, given we haven't seen this really spill out, bleed out to the broader commodity market yet.
Yeah, I think that's fair. I mean, as we've just heard, the sanctions story is evolving day by day, and quite obviously, energy sanctions are, an extreme, not because they're, undesirable in terms of the impact they will have on Russia. Of course, that's actually, why they are desirable in the first place, but rather because, we have a lack of energy independence, certainly within Europe, and so forth. There are some pretty heavy reliances, and actions, therefore, to pressure Russia via the energy market will feed back into domestic European economies in quite a nefarious way, and therefore political leaders there are reluctant to engage. But we saw just in change in actions prior to the weekend and then over the weekend that there is such broad political agreement and broad political pressure to really try and influence the Russian actions via financial means that we can't discount the idea that Russian exports of energy products may end up being sanctioned, at least partially, if not entirely. So, yes, it's a fluid situation. The oil market, commodity markets in general, were on a tear anyway. I think part of that is the self-fulfilling prophecy of higher inflation and real assets and commodity assets as an inflation hedge, and that feeding off itself. This certainly isn't a force in the opposite direction, and a number of banks have got 110, 115, all the way up to 125.
Huge numbers, James.
Now,
just massive,
it's difficult for me to disagree.
Massive numbers. Right? 115 at Goldman, others looking for more. Still need to let this one flesh out and really get a deeper understanding of what's happening, because some of these names are behaving like the sanctions are already there. Coming up, your morning calls, that's next. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Futures down 0.2%. Your morning calls start now. Truist downgrading Charter Communications, anticipating elevated pricing pressure and further market share losses. Tasi Advisory upgrading Kroger, expecting upside given management's new focus on digital growth. And finally, B. Riley downgrading Foot Locker, highlighting the retailer's disappointing outlook. Coming up, geopolitical uncertainty boosting the energy sector. That conversation just around the corner with this man, Mohammed Al-Arian, next on Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Wherever you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
20-something seconds away from the opening bell in New York City this morning. Good morning. Futures look like this, recovering off session lows. We were down more than 1% on the S&P. Now we're down 0.25%. On the Nasdaq, down by 1/3. On the Russell, the small caps down by 0.2%. 2 months of losses to start 2022. The third month of the year starts right now. Switch up the board and get to the bond market. Your 10-year yield coming in lower, 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 then bouncing back a little bit, down 5 basis points to 177. Big bid into the European bond market. Bunds rallying, BTP's rallying. The theme of this morning, the euro weaker. Euro dollar 111.53, down by 0.6%, and crude higher through 100, through 101, 101.10, up by more than 5%. That's the price action. 20 seconds into the open. Here are some movers. Here's Abby.
John, let's stick with that energy strength because we do, of course, have both Brent and WTI crude absolutely soaring above $100 per barrel. The highest level since July of 2014, of course, on supply fears around the Russian invasion of Ukraine. You can see ExxonMobil and Occidental Petroleum soaring. Exxon off of its highs, but still up. On the other hand, you have the big banks lowered. This, of course, as yields come in on that bid for bonds that you were talking about, a continued theme that we are seeing. And then taking it to the earnings story, we have Target having its best day since 2019, a very strong quarter, November of 2019. They beat estimates. The outlook extremely strong as the pandemic boom is expected to continue. Kohl's put up a great quarter, strong outlook, and AutoZone beat sales. Investors like it, so a good day for retail in an otherwise sort of mixed morning so far, John.
Abby, thank you. Big focus over the last couple of days, not just on energy, on defense stocks as well. Kaylee Lynch dropping by for more. Hey, Kaylee.
Hey, John. Well, obviously, those defense stocks have gotten a lift as we see the situation escalating in Ukraine and see us escalating Western response as well, particularly Germany pledging to up its defense spending. But on the energy side, this, of course, is primarily an oil story. Concerns about potential supply disruptions from Russia giving a lift to crude prices up more than 10%, nearly 11% for WTI over just the last 2 days. We are now back north of $100 a barrel, the biggest two-day gain since September of 2020. And no surprise, as Abigail was detailing, that has provided a lift to energy stocks. The moves today are a lot smaller than we saw with some of the shale players in particular yesterday. We're up about 1 percentage point across the board for the likes of EOG, Diamondback, Devon Energy up by about 0.75% as well. It, of course, the fifth best performer in the S&P 500 this year, was the best performer last year. And I actually caught up with the CEO, Rick Muncrief, yesterday about when he would start to pump more oil with prices this high. He still was talking about discipline, though the Biden administration hasn't talked to him about the possibility of boosting production given some of the inflationary pressures within the market. And one final note on these energy stocks, John, yes, they have done quite well, but oil has done better. They are still lagging the price growth in the underlying commodity. And of course, it still trades the energy group at a much lower multiple than the rest of the market. So any continued value rotation from here, these stocks could benefit from that, John.
Kaylee, did he suggest that Secretary Granholm has not picked up the phone?
He just suggested that he has not yet been in talks with the administration. It's something we also heard from the Pioneer CEO last week, that even if the president did call, he wouldn't be pumping any more oil. So it's definitely a theme, but the Biden administration doesn't seem yet to have done those reach outs, John.
Interesting times. Kaylee, thank you. Joining us now from Queen's College, Cambridge, from Gramercy and Bloomberg Opinion, Mohammed Al-Arian. Mohammed, in the FT earlier this week, in the past week, you talked about being early in the process. I think, Mohammed, that's a really good place to start. We're still early in the process. As we work all of this out, what are you focused on?
So, John, first and foremost, I am focused on the humanitarian tragedy that's going on with the growing number of atrocities, and that's something you have to worry about in terms of early in the process. In terms of markets and the economy, we are yet to see the full impact of what's going on in markets, on the economy. And when I say in markets, John, I even include the ruble and what has happened to Russian assets. We are still early in the process. This thing, unfortunately, doesn't go away soon because no one can figure out what the off-ramp is for President Putin.
Mohammed, when you start disrupting capital flows to an economy like Russia, which we depend on so much for commodity exports, is it inevitable that you disrupt energy flows even if you don't want to?
So first of all, never underestimate the power of crippling a payment system. It brings the economy to a halt. We felt it in 2008 when it was counterparty risk between banks. That impacted the banking system. Russia is now having its payment system crippled. And that brings to a halt a whole series of things. The energy markets still believe that you can have a carve-out. They still believe that you can have an effective way of shielding energy supplies. Let me tell you, for someone who has lived through various dislocation, it is very difficult to be surgical in the midst of such disruptions to the payment system. So I think we still are overestimating the amount of energy that's going to be supplied to the marketplace unless other producers increase output.
Where are you looking for signs of stress at the moment, Mohammed?
So, of course, first and foremost, it's in Russia. It is everywhere in Russia. It is an uninvestable place in terms of virtually all financial markets. It is in those exposed to Russia, and we haven't yet seen the full impact of that, but you've been talking about European banks. We've seen quite a few mutual funds get hit quite hard, and that's sort of round one. Then keep a very close eye on flows. Figure out where is the pain trade and who's going to try to get back on side. And then longer term, John, this is a significant increase in the stagflationary winds blowing through the global economy. The marketplace today is, I think, relieved that that means that the Fed will tighten less, and I think that's correct. I always thought it was ridiculous, this notion that they would tighten 8 to 9 times this year. I think the marketplace now sort of is coming down to a more reasonable amount of tightening. But what the marketplace hasn't recognized is there's a reason why the Fed will tighten less. It's not because inflation has a better outlook, it has a worse outlook. It's because growth has a significantly worse outlook for the global economy.
I want to pick up on the last point in just a moment. You made several other points there. On the signs of stress, people lining up to dump assets. Mohammed, the gates are closed. And you can see the gates are closed in several funds. The exchange is not even open in Moscow. One way of expressing that is through European banks. You touched on that too. Raiffeisen is down by 8%, ING by 7%, SocGen by 6.65%, adding to the losses over the last couple of days and year to date as well. Mohammed, when you get a series of people, investors and companies, lining up to dump assets all at once and the gates are closed, traditionally in history, what are the spillover, the consequences from that?
So when you can't sell what you want to sell, you sell what you're able to sell. And that's how you get contagion. So it's one thing for, let's take a mutual fund that has been caught offside in Russia. It's one thing for the mutual fund to tell investors, we can't sell our Russian assets and we're going to maintain what we think is long-term value. That's fine. I can understand why they'll say that. But what happens if the investors start taking out their money? Typically, these mutual funds are forced to raise liquidity, and they have one of two choices. Either they sell other stuff, and that's how you get contagion, or alternatively, they put up gates, which is a massive business decision. So, you know, these things don't happen immediately. I can take you from crisis to crisis, where prices react first, market liquidity reacts second, and then third are flows. So that's why I think it's critical to keep an eye on flows, because that's what causes contagion if we start getting outflows.
More broadly, Mohammed, on the last point, we seem to be taking some comfort. This was the point you made moments ago, from a Federal Reserve that maybe doesn't do 7 hikes this year, it does a few more, perhaps doesn't hike 50 and only hikes 25. That's the short-term story. Does that just lay the ground for more problems? Does that become more problematic at the end of this year, Mohammed, going into next year?
Yes, I mean, remember, we entered this in the Fed in a hole of its own making. We no longer had a first best policy response because the Fed was late and missed the orderly windows. Now the Fed faces an even bigger challenge. In the short term, I think rather than slam on the brakes and cause a recession, they're likely to opt for tapping the brakes. But that means that the inflation issue becomes more persistent, and that has its own consequences. So that's why I'm saying, John, it's early in the process. I understand people who want to buy the dip. I understand this notion that the Fed will be less hawkish. I understand the valuation argument. I understand all these things. But in reality, we're looking at so many potential outcomes, with technicals playing a much bigger role and not being offset by stronger fundamentals. The fundamentals are weaker today than they were a week ago.
Mohammed, you squeezed us in this morning. We appreciate that. We always appreciate catching up with you. Thank you, sir, as always. Mohammed Al-Aaron of Queen's College, Cambridge, Gramercy, and, of course, Bloomberg Opinion. Back with us, Victoria Fernandez, Michael Purvis, James Athey. Michael Purvis, you listened to some of that. Too early in the process to draw conclusions. Your thoughts?
Well, sure. I think there's a wide spectrum of sort of new unknown unknowns. One thing that is, I think, is pretty consensus is that we are likely to see higher inflation and probably lower growth here. I think on this, higher inflation and how the Fed plays into this, I think, for me, the most obvious tool to fight this incremental inflation issue is really not through Fed policy, but it's really it comes down to sort of ESG, both at the policy level and it's sort of at the, if you will, the market level as well. And, one of the casualties of this war is really the pace of decarbonization. I just, the midterms are around the corner. You referenced your discussion with Devin and the sort of lack of communication between the White House there. But if oil prices are going to keep climbing, I have a hard time thinking that there's not going to be an increased pace of softening of the stance on getting the shale response back to where it was back, before COVID there was. I think it's important to step back, and when you think about the inflation dynamics that have come over the last, really since COVID, there's been three pillars. One was monetary stimulus, the shock and awe of that, the fiscal shock and awe. Those two shock and awe's are in the process of normalizing. The third pillar was really ESG that happened to be concurrent, and that comes down to everything from the cost of capital for Exxon and its ilk to higher regulations, and on both sides of the Atlantic. Now with the war, this is a game changer. I think, to my mind, ESG is going to be redefined in the coming months, and it's going to be less environmental and more things about, more macro related as it relates to making sure.
Well, Michael, let me pick up on that, because the point you're making, I think, is critical. Victoria, ESG has been this fluffy term that some corporations have thrown around to appease people at home. Then abroad on the international scene, I mean, let's just talk about the reality of things and talk about the hypocrisy. You'll have companies that do very progressive things in America that then still deal with China, still deal with Russia, autocratic regimes, and they'll say things like, we just do what the US government allows us to do. If they tell us we can't, we won't. But at the same time, they talk about ESG and social responsibility. Now, Victoria, they've even got a moral compass, or just a compass that's set by the US administration. Which one is it? And to Michael Purvis's question, does it take on a different character in the coming years?
Jonathan, we actually saw ESG take on a different character even during COVID. So we have a large percentage of our assets that are actually screened, some for socially responsible, some for ESG filters. And during COVID, a lot of the environmental component shifted, and it became much more about the social and the governance components. And I think we're going to continue to see that trend. Due diligence questionnaires coming in are all about how you're treating your employees, the things that you're doing to help better the society that you're in. And I think that's what we're going to see going forward. And you're right. It's kind of you've got two stories going on. You've got a domestic story and you've got an international story. Europe has such strong parameters around some of their ESG reporting. The U.S. does not at all. And I think that's another area, because of what Michael was talking about. That's an area we're going to start to see more of. I think you're going to start to see more restrictions come in regards to ESG. I think you're going to see more regulation and how companies report things. That all feeds through, especially when you're looking at mutual funds that have this ESG component to them, or individual investors. So I think it's going to be more complicated. You're going to have to really dig down with your money managers and find out how they're screening and what they're screening out. And it's going to become more important for your end investor over the next 12 months.
James Athey, I wanted to get your thoughts on something Mohammed said just quickly before we run. We're still overestimating the amount of energy that'll be supplied. All of these issues we're talking about in the last 44 minutes, that's what it comes down to. Are we still overestimating the amount of energy that'll be supplied? Yes or no, James?
I think that's probably a reasonable starting point. I really don't know the answer to that. I'm sure commodity experts probably would struggle to be high conviction on the answer, but everything that we know, Russia produces, 11 million barrels per day, and that's roughly 10% of global oil consumption or global oil demand. That's a pretty significant number, and there are risks to that number not being able to find its way to those that need it. So if we were already in a tight oil market, which it seemed to be partly for these sort of ESG and investment reasons, everything that was happened in the last 2 weeks is certainly at the margin exacerbating that problem. And again, OPEC is unshifted at 400 barrels per day, and the strategic reserve is tiny. So I think that's a pretty reasonable assertion at this point.
James Athey, thank you, sir. To all three of you, thank you very much. Victoria Fernandez and Michael Purvis too. A headline from the energy company Centrica planning to exit gas deals with Russian counterparts. That from the CEO just moments ago. Coming up, looking ahead to President Biden's State of the Union address.
The president will lay out the efforts he has led on to rally the world to stand up for democracy and against Russian aggression.
That's next. This is Bloomberg.
what's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
The president will lay out the efforts he has led on to rally the world to stand up for democracy and against Russian aggression. And he will talk about the steps he's taking to mitigate the impact of President Putin's invasion of Ukraine on the global economy and the American people.
The stakes are high for President Biden, a White House official previewing his State of the Union speech saying the following: Biden will spend time talking about the importance of American leadership and the work being done to rally the world to stand up for democracy. Anne-Marie down in D.C. for us. A headline just coming from Secretary Blinken in a pre-recorded address to the UN Council, Anne-Marie. Blinken questioning Russia's membership in the UN Human Rights Council. You imagine this is going to be a big feature of the address a little bit later.
It certainly is, Jonathan, and we should note, not since President Obama and the financial crisis and George W. Bush in 2003 making his plea to the American people to enter Iraq that we've had a president have a State of the Union address, which for the most part is usually focused on domestic concerns, that so much of it is going to be focused on foreign policy. Tonight is really going to be about inflation and in Ukraine. And Jonathan, they really all meet, these two stories together, because especially this is an issue the administration is facing when it comes to consumer prices, especially when it comes to gasoline. And we are seeing that geopolitical risk premium in the oil market, Jonathan. So the president tonight is going to have to really discuss both of these issues, which in our minds are really intertwined.
MH, what do you make of the fact that there hasn't been enough outreach to the oil patch to get them to do more? We heard from Devon Energy. You and I touched on that a little bit earlier. Is that going to come up at all? We were thinking about whether this accelerates the transition away from fossil fuels or maybe reverses it in some places too.
Well, the press secretary Jen Psaki over the weekend, when she said on ABC this week that energy sanctions were firmly still on the table. This is something the administration is trying to create a carve-out for to protect American consumers and European consumers as well, and the global energy market in general. They did say that this shows that the president is, in his mind, correct in the sense that it's time that the world, including the United States, which Joe Manchin was saying yesterday, why are we still buying Russian barrels of crude, because the United States still does, that this should accelerate that transition, that no country should depend on foreign fossil fuels. And this is a reason to invest more money in climate. And I imagine that's the pitch this president will give to the American people, because, Jonathan, at this moment in time, the situation means he's become a wartime president. But if you remember clearly during his campaign, he wanted to be a climate president.
Anne-Marie, thank you. AMH down in D.C. Just getting a headline from AFP from the German finance minister. The G7 discussed further sanctions against Russia. We've had a pretty strong suggestion of that through the morning. The headline that jumps out at me is from Interfax. Russia's still working on how to respond to sanctions. What do the counter-sanctions, the response from Russia, actually look like? All of this coming ahead from a ton of Fed speak. Bostic, Mester, Evans, Bullard all speaking over the next couple of days. And then Chairman Powell, Mike McKee, tomorrow. Mike McKee, you're the Fed whisperer. Help us all understand what this means for this central bank, the leadership, and Chairman Powell.
Yeah, it means more confusion and a little less guidance for the markets. I mean, for the Federal Reserve, like the ECB, it's all about Russia, the war, and commodities. In the 70s, central bankers learned to put up with commodity price spikes, especially energy, because they are essentially temporary. But what we're seeing now is a time frame when the prices are already very, very high. You can see what happened in Europe the last month in February, and this is pre-Ukraine. And you can see what the forecast is for U.S. CPI next week when we get that. The Fed doesn't know what this is going to mean for the economy. They don't know if this is going to really slow the economy. The Atlanta Fed GDP Now Index tracking growth at just 0.6% for this quarter. Does it rebound? That's going to be a big question. Those are the kind of questions that Powell is going to face over the next 2 days up on Capitol Hill. Also, he's got to worry about whether or not inflation expectations become embedded. And you can see there, traders have basically priced out 50 basis points now. They're looking for only a 25 basis point move in March. And even with those inflation numbers, they're not looking for anything from the ECB yet.
Mike McKee, the ECB, March 10th. March 16th, the Federal Reserve. Mike, thank you. Coming up, your trading diary. Tons of Fed speak and Chairman Powell just around the corner. Coming up later this week. From New York, this is Bloomberg.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
25 minutes into the session, equities down just a little bit stateside by 0.5% on the S&P. Over in Europe on the Euro Stoxx 50 and on the DAX in Germany. Guy Johnson will run you through that. Down by more than 2%. In the bond market, a bit of the front end sticks. We come in by 8 basis points to 135.46. Remember, on Friday's session, the high north of 160 all the way in as we start to reprice and rethink the Fed's path through 22 and perhaps beyond as well. Will that stick? That's the price action. Here's the trading diary. ISM manufacturing numbers, top of the hour. Then more Fed speak. Mester and Bostic speaking later in the day. President Biden's State of the Union address at 9 p.m. Eastern Time. Fed Chair Jay Powell, Wednesday, Thursday before Congress. And we round out the week with payrolls Friday. Your estimate so far, a moving target, 403,000 from a previous number of 467. From New York, this was the countdown to the open. This is Bloomberg.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Businessweek about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands, and it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in Sari Sari stores every day, also on TV, radio, newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with Number Fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their $1 million peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the NBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them, to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113A, also 3 times a month. Also, there was a time my father was hospital due to heart failure, Still, he had to attend the 2-branch hearing otherwise. For not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010 after staying for almost 1 year in the hospital. He died of complications due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as a coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic they had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack of the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be a ploy by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker, but pretending to be a foreign person.
Federal investigators have detained 1 man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Venergold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Venergold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Venergold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Venergold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why. He may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Venergold as an opportunity to leave that troubled home. Venergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Venergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Venergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Venergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there like a lot of other natural hazards. These are very, very infrequent events, these collision events, where an object actually impacts the Earth. The most important thing that we need to know about asteroids is, when the next impact is going to happen and how bad it will be. What we know is that an object that's